What's up, guys? Woo! Good morning. How y'all doing? Is this like, this feels like one little hair to tickle in my forehead here. What's up? All right, let me try to do this. Number winners 2 giveaway start. So I'm gonna try this one more time. Let me make sure that we're doing a giveaway today. Take profit giveaway. It's gonna be awesome. Let me make sure I get everything set up here. Okay, click. Referral agendas, all this up permissions. You know what we're gonna do? I'm gonna say screw this bot. I'm just gonna, I'm done using the bot from now on. Let me try just doing we'll try one more time. The bot fails today. 1049. Oh wait, hold on. All right, guys. Okay, 10 o'clock a.m. the 4th today. Done and done. Good morning, guys. Hit the like button. Rocket scooter, yeah. Hit the like button. Contest number winners 2, giveaway contest channel, and done. Wait, start giveaway. Delete. Okay. Okay. I know I'm like, I feel like I'm so far behind today. Getting a late start. Okay. Okay. What's up, guys? Good morning. Fat Tuesday. Let's go. It's that time of year again, one of the best times of year. It's the celebration part of the year. We're always big parties, big celebrations from, gosh, you name it. Like, you have Mardi Gras and isn't Carnival at this time. You got like everything. You got all your big fancy stuff. Feeling good, feeling like a party. I feel like I'm partying. Maybe crushing it in the markets. Feels like a party over here. All right, a couple things I need to do. Oh, I know what I need to do. Giveaway today. And today is two 50K test accounts. Take profit, one word or two. I gotta learn how this stuff works. Looks like it's one word, I bet. That's always, gotta learn this stuff. Three words or one word. Take profit trader. 3 words. Okay. What's up? All right, good morning, everybody. Hold on one second. Okay. I hear pickle outside, like always. Good morning, y'all. Don't forget to smash the like button. We're getting ready to get going. All right, we're back. Good morning to my shout outs, everybody. Good morning. First people here, Chris, Stu, Simon Dean. Congrats on the victory the other day. And also I'm congratulating Victor, who's going to win today, as we know he will, on today's Take Profit giveaway. We're giving away 2 Take Profit 50K accounts. This is all to do with you know, how much you guys like them. I'm actually going to try them next after I do the Tradeify thing. So I'm gonna give them a shot at. The rules look pretty awesome. DJ Boat, hit that like button. Yeah. Dominic, Stereo, Matt P. Dreamland, Rich, Lee, Jason. Couple more. Hydra, Benny Master Rich, Nadia, Francesco, SQQQ. Good morning, dear. Handsome. Thank you. Nadia, good morning, dear. This sounds like the emails I get all the time from crypto folks. Morning, dear. How's your trading? Nadia, Plan Zero. Nadia again gets 5 shout outs. Keep saying Nadia. Simon, Plan Zero. Monk. Just Shima. What's up, Shima? Good to see you in here. All right, Tio. Ian, Frank, Annie. Always good to see y'all. Shannon, what's up, man? Annie. Luca. Stu. Hey, we need a few more mods. Now I think about this. We need a few more mods, guys. I always do this. in the days. We're going to get prepped and going. Looks like the market's kind of like dropping a little bit at the open here. So I think we're going to have another one of those awesome, crazy days. Could be a nice little dead cat bounce today again. Big nasty sell today on Trump news. Could be a rebound green day today. You know how it goes in these weird markets. Remember, he talked about 1,400 points of range of NQ. That's something that was shown in the monthly maps. But back to the question of mods, right? Here's the criteria for being a mod on the Rocket Scooter channel. You must have a heart made out of iron, and it'd be as cold as ice. You must love swinging a band hammer. You must love ruling with an iron fist. Take no mercy. Take no prisoners. When those trolls come through, give them the band hammer and like it and make it hurt. Punish people by putting them in timeout. These are the criteria. What does it cost? Absolutely nothing. Do you want to live on a power trip? Would you like a forum to exercise your power trip? Who would like to apply to be a mod? Ruling ruthlessly in this love-filled Rocket Scooter channel. Who wants in? I'll take you when it's serious. You're here in the morning every single morning and you want to help out. The rules are as follows. 1 out of 1,000 people come in here and promote their goofy stuff they sell online. All you have to do is just quietly remove them from chat. Or, you know, make a joke out of it and have fun with it. I don't give a fuck. We have fun here. Anybody here all the time that I know wants to go, you have to have a heart that's as cold as ice. Me, Francesco, Lucas, Master Rich. Getting 2 dozen donuts. That's the kind of vibe we need from our mods. What's up? Hey, what's up, Aaron? How you doing, man? Got a few some fun, but got the full 5 on TPT. Awesome, dude. How's your experience with them, by the way? That's exactly what your resume when you applied to Rocket Scooter. That's why Stu was actually given the role immediately. He goes, you know, I like to not just ban people, but I like to make it hurt on the way out. Francesco, me. Okay. Your resume's been approved. All right, good job. All right, hold on. Who else? We're going to take there for Lucas. Yeah, you're here like every single day. Cool. Why not? See how easy it is? It's like I trust you guys. What's your email? I'll tell my mom to apply. Stereo's mom, come on in. Let's go. Okay, like 2 or 3 more people. If you down? Matt? Yeah, Matt's here every day too. All right. Cool. All you guys have to do, I just need like 3 or 4 people. You know why? Because there's a lot of people coming in the chat. We've got like 500 something viewers now. It used to be kind of like, you know, and it's going to be 1,000 by next month, probably. You're here every day. Yeah. Bruce is here every day. Yes. All right. And really, and options. Yeah. Options awesome too. Okay. That's it. Anybody else? Just a handful more. Really all it is just enough people here. No, there's no, you know, it's fun. All you have to do is just quietly remove people's silly comments. Usually it's people promoting something, or there's that one kid with the Crocs and the broccoli hair that comes in all the time saying, how much money did you make? No, I'll show your P&L. You know, people like that, just give them the axe where they start fighting with everyone else. Usually what happens is usually somebody says something goofy, and then 2 or 3 of you guys argue with them because I teach you to hate goofy stuff. And then they argue with you, and then chat is filled with y'all criticizing them. But now I'm going to give you the power just to remove them. That way you can win your argument in one swipe. All right. All right. Nominate Icewild. Yeah, I nominate Icewild too if he wants the role. Got a meeting have to be at during market open. Hey, Dominic, that's probably the best news I've heard all day. If I had a meeting to miss out on this crappy market, I would do it too. Waking up below DD bands, you guys know the rule. This is an absolute shit show of a day already. So okay, let's get everything ready. Jar update. Oh yeah, sorry. Let me get some more water. I'll be right back. Ooh, eggs. All right. Okay. I have a bunch of make fats, fake mats in the Discord. I know. Oops. Yeah, so I've written Discord like a million times. I literally post maybe once a month over the last I don't know how many years to tell Discord about the problem they have. They don't listen. See, Discord allows you to send anybody a DM, right? As long as you share a server with somebody, you can send them a private message. That's already weird enough. Or a DM request. And then you can change what your display name is in that DM request. It'll say something like, oh, let me show you. I can see if I have, I bet you they even send me messages. Let's see message requests. I get them all the time. Watch this. Here, let me just show you what the what it looks like. Like over here on the side, look, I get messages from, look, they can put whatever they want at the top. Look at that. I get a friend request from my friend Brett Simba, CEO. Oh, friend request from him. As a matter of fact, that's excellent. Looks just like him. If I didn't look underneath it to see there's a dot or it smelled wrong, but look, you can put whatever you want at the top. Gandalf, see, look, Gandalf, the CFO, sending me the friend request. It's amazing. Gosh, and all these other famous people. Now, most of these might be you guys trying to become like friend requests with me, but I don't accept friend requests anymore because I get so much scam. So I don't know if you're a scam or not. Look, our day trading is sending me a friend request. r.daytrading.0_. Stock Talk Weekly sends me 3 requests in a row. Danny Naz, up on Wall Street, send me 2 in a row. Look at that. It's like they let you just choose whatever name you want people to see. I'm going to become Donald Trump and start messaging people. Asking them to send me their crypto wallets. You know what I'm saying? Like, apparently Discord has a fucking hamster on a wheel running security over there. Like, what are they doing, right? Just pick whatever name you want, send me people a message, right? That's pretty easy. I hear there's a bot out there that can ban people from the server, but it doesn't stop people from DMing you or changing their name. I don't know. Right. Yeah, delete everything. Absolutely delete everything. Let me tell you guys something that might help you with this issue. I don't want to be anybody's friend. Literally. I don't like y'all that much. So I'm not going to send you friend requests. I love you guys, but I'm never going to send you a friend request in Discord. Unless we play Call of Duty together or something like that. Other than that, I'm just going to message you in the channel. The only time I would ever send you a friend request is if I need to DM you and you're not in the server. Like you won a contest or something. If you're in the server, there's no... The funny thing that people do is they'll join the server and they'll say, hey, thank you for joining the server. My name's Matt. By the way, block anybody that sends you a message from the server because there's a bunch of scammers. So they'll block, you'll block everybody, and therefore we can't message you to warn you. And then they say, by the way, why don't you click this link? We have this other server. So people don't think every once in a while, have like a 500 people might fall for it. They're like, oh, I joined the Rocket Scooter server and Matt's messaging me, but he's sending me to another server. Okay, that sounds all right. Use your brains, guys. I love y'all, but man, that's like how it is sometimes. I guess maybe people are so like quick to think about stuff instead of thinking it through. There's no logic behind you joining our server than me sending you somewhere else. Or you join in my server with the tens of thousands of people who do, and immediately you're getting a conversation from me. I'll tell you, my DM backlog is so crazy. It takes me a day to even get to people that message me on stuff. So trust me when I say I'm not sitting here like, I can't wait to follow people and have conversations with them about how their trading is doing, dear. How's your trading, dear? How's the market treating you, dear? Never gonna be Maddie. All right, let's get ready to go to the market. Opening in 21 minutes. Let's talk about it. Pre-market. Don't forget, guys, hit the like button. All right, you know what I'm saying? Yeah. While we start up. All right. We have tariffs going into effect, I think, today, right? So as far as data goes for what's going on today, we have a really big news week. Wednesday is going to be the ADP numbers, which means Friday's the non-farm numbers, and the unemployment rate. So these are going to be big movers this week, and then Thursday is going to be Thursday was something I thought. No, Wednesday is going to be the PMIs. So the S&P PMIs are going to be then. The ISM numbers were yesterday. So when you have ISM, then you have the S&P Global on Wednesday. And then when you have the ADP on Wednesday, you have the non-farms on Friday. It's a big week, and obviously the monthly map showed about 1,400 points of travel. And the NASDAQ, we'll show you that really quick. This is the monthly map from yesterday. Now, it's kind of cleaned up a little bit, not as much as 1,400 points, but it's still pretty bad. I think the tariffs will fall through. Not this time. I think it's going to be a thing. Countries are going to... I don't think anybody's wanting to buckle to them. Give Trump what he wants. So 15 points on Q times 40 is about... Hold on. Roughly 600 now. So normally what it is on monthly maps, it's the space between the bulls and bears, which is where the liquidity is about what you expect to see on your weekly range. And while actually the biggest one is here. So here to here. 520 to 500. So that's roughly, hold on, wait. $520 to 500 is 20 points. 800 points. Guys, hit that like button. Everybody. Thumbs up, bottom right of the screen. Remember the new rule. If we don't get 300 likes, you can turn off the screen when I make my trades. $129. You guys know the rule. Thumbs up. Let's go. Kick that out. Go in the place today. Take profit trader. Giveaway 2 accounts. You have to be here for the rules. I'll tell you them in a little bit, but in the meantime, smash that like button. I love that song. Appreciate you guys tipping your bartender. What kind of cocktails would y'all like today? Would you like a NASDAQ spritz? An S&P and tonic? What would you like? A Dow Jones Collins? A Manhattan? Let's have one. A Shirley Temple. Well, opening right outside of DD bands, and likely if yesterday's DD ratio was still above half, this might be a long entry out the door. That's what I'm thinking. As long as we support that DD band, I like that. Greater market today. It's up. It's kind of a toss-up, right? Because we don't really know what we're going to get. Everything sold off really hard yesterday, so... Monthly maps are bearish. Can you give me 1 second? I'm going to go to the restroom. I'll be right back. All right, so today we're looking at anything that supports inside of here. I'm looking for big ups on this, right? Anything below here, we sit out. Strong pivots only on the downside. Longs only, small trades if I get any. We need to find if we have any impact lines here, so let me calculate them real quick. I'm just double checking back here. I don't know if we have this one that far away though. No, I'm gonna have to guess on this one. Where was it? Where did I draw that guy at? Hold on, I hear Pickle outside. Let me get him real quick. Pickle, come here, sit. Hang out with Daddy today. Come on, you wanna trade with Daddy? You wanna trade with Daddy today? Oh, we got Pickle here. Look at this. Look who we got. Everyone say hello. Got Pickle here. Big boy, big boy. You all right, bud? I'm gonna sit here while I work. Hang out with us. Okay, where the heck is that line at? I feel like I'm going crazy this morning. I feel weird. Like stomach feels weird for some reason. Okay. Where the heck is that chart at that I was doing? Okay, 20030. Did I delete the line? Hey, bud, hold on, just chill. Okay, this goes all the way back to November. Okay. November, all the way back here. That was the one. Okay, I don't know exactly where that line is going to be, but I'm going to take a guess. Maybe about right here. Volatility, hold on. About in there, just as a guess. He's whining for his mom. Okay, 2135, and this is an estimate, by the way. That's pretty far away. So I ordered some cool stuff for the computer. Like, no longer is this arm going to be here. I got this one that's like low profile. It's going to sit close to the bottom of the desk. I'm super excited about that. I got a new camera stand, so no longer have this weird camera angle. I can put all my stuff like in a nice, neat, easy. Super excited. So excited. All right. So down in here, the way that I look at this is that there is no, down in here, no shorting down in here. No shorting. You guys know the rule, the DD rule. The DD ratio greater than half. I think he's crying for his mom now. Bud? Hey, you getting camera shy? He must hate the lights. Along here with the small trade. basically it. Let's double check the S&P. Make sure there's nothing like down there as well for S&P. $57.86. That's probably the one we need to watch that's nearby. Okay. Why are you whining? He normally sits here when I work, and he'll sit here all morning. It's so funny. Can y'all hear him? He's like... So, irrational out the door, no shorting, let the market die out. If it's going to die out, let it die. Any break of DD band up to the upside is a decent long setup. I do like that. Long hair dachshund. Yeah, so he's an English cream dachshund, which is like the and let me show you guys. He looks like what do they call it? A golden retriever puppy. Oh, he's getting nervous. Okay, let me let him down. Hold on. Hey, bud. You don't like the cameras, huh? Or the lights? Hey, babe. Hey, babe. Pickle came up here, by the way. That's okay. He came up here and then he got scared of the lights. All right, let's see what we get, y'all. Ooh, that market's moving. We got some candles here on NASDAQ. What is going on even right now? Whew, that Dom is flying around. Hold on. Double check. Is there news right now? Like literally right now? No, nothing. These days are kind of simple. They're not really hard to figure out. Usually the rule of thumb, and let me show you the handouts. If you guys have gone through our training program, let me show you the handouts. This is a super easy day today. Right out the door, we already know there's so much we can do. Mostly it's going to be sitting out down here below this band. But... So these are the rules of the band. You guys want to, like, you know, screen cap this or whatever. These are our handouts from our courses. And so pretty straightforward. Below the green bands, say it with me. No shorting. Absolutely none. None. Let it fall. This is crazy volatile when you move this far pre-market. Absolutely no shorting. Let me clean up this because I'm just going to show you guys this. There's literally no shorting down here. Nothing. As the market opens below here, we're going to have what's called irrational market, irrational signals. You can open up here. The signals have already triggered. Immediately when these trigger, trade small. Already. That's the rule. When these lights are red, trade small. Trade small. Trade small. Micros, if I do anything at all, small, longs only, at strong pivots only, MHP, bear zone top, bull zone bottom, red line. We already have a red line here, which is roughly 40 points lower. So there could be a long setup from here to there. If anything, this is no man's land. Don't touch. No touchy. Yeah, capiche? All right. Oh, God, Thinkorswim, stop doing that to my eardrums. Why? I thought I turned that off. All right, hold on. I'll teach you to make noises. Volume to 0. Okay. Let her fall. Okay. Don't forget, guys, take Profit Trader 2 account giveaway today. You got to enter in the Discord. If Discord bot fails, then, you know, that's okay. We'll go ahead and, like, you know, do it with the drawing, the normal drawing we do. Let's make sure we've marked all of our potential gap fills. Anything sitting here, NASDAQ does have a gap to be filled. 492.26. That's always a nice little exit target right here, so be careful. I have that marked. Market could pivot on the gap fill. S&P filled its gap and kept going. Okay. You guys know the rules. All right, everybody. Super quick. You have plenty of time because we're below DD band. What's the rule? Below DD band. What are we doing? What are you guys doing? You ready to buy the dip here? Or are you ready to wait it out? You like the bell? I like the bell when it's not like 800 fucking decibels. Wait. I mean, my ears are ringing. We're going to wait. We're going to wait and see what we get. Oh, and then right out the door below MHP, this is the sign. This market is going to sell off so hard today. Ladies and gentlemen, this is such an easy setup. It doesn't get any easier than this. So easy. Here it is. MHP rejection all the way to red line is we're going to open and we're going to dump. Open and dump. And it's just going to fall. 57.86. Super easy. Sit out on this one. Not touching this. Now I could throw a long contract right at that red line. QQQ is going to fill its gap. Okay. Ah, we know this. I love our rules. Market avoidance is one half of the battle of being profitable. Market avoidance. And NASDAQ has a gap fill right here at 492. Same stuff on NASDAQ. What an easy day. Don't you love how easy this day is? It's so easy. Here's my decision. Screw you, market. You suck today. Full port shorts? Everybody, no, I'm just kidding. All right. All right, same thing. Monthly hedge pressure resistance opening below. Greater market is bearish. DD ratio is bearish. Greater market, ladies and gentlemen, is back to being bearish. And I told you when the greater market's bearish, you're going to feel it. The market opens and just takes a nosedive. That's it. We just filled the gap on NASDAQ. You know what the greatest part about trading is? I don't have to do anything if I don't want to. So let me tell you, anybody that's out there trying to like short this or long this or whatever, in this particular mode, the market's going to be random and unpredictable. Strong pivots only are these little red lines here, 57.86. This is going to be magic. When we touch it, there's likely to be a little dead cat bounce off of that. Let's get a little bit of a kind of like retracement on this one set up just so I can kind of mark where that midpoint is. Watch this. I'm going to do like a... My trade's going to last for 5 minutes today, guys. Literally 5 minutes. Ready for this? Let me show you the art form calling markets. Now, we're going to get a little bouncy bounce on that gap fill. But boy, this market is dead. Dead market. D-E-D. Market, you're dead to me. Okay? You're dead to me. No shorting, strong, long, pivots only, long, small. Inside of here, there's a range. Oops. Let's double check where the VIX is. The VVIX should still be growing long and strong on this one. Yep, VVIX up in the 130s. VIX is slowly growing. That volatility explosion I was telling you guys about, just starting to happen. So S&P still got a little bit of room to move. Here's the NASDAQ. Yep. 1 minute candles are roughly the same with the range on NASDAQ. Let's see what volatility we're dealing with. Roughly 740 down to 290. Sorry. It's about 50 points in the 1 minute. It's actually even bigger than that. 360 down to, yeah, so it's about 60 point candles. So we're talking we have a lot of overshoot, a lot of volatility. Dead market. VIX is just way up in bull territory. So our market avoidance stuff is second to none. For anybody that teaches anything or teaches you guys anything, market avoidance is one of the primary keys to maintaining profitability as a trader. Yeah, that's the thing. That fib tool, it like, for whatever reason, it doesn't save our drawings as a template. I don't understand why. I'd love to save it like this. I have to remake it every day. Guys, don't forget to hit that like button. Let me do me a favor real quick. Bottom right of the screen, everybody hit that thumbs up. I'll be right back. Let's get it 300. Okay, I'll be right back, guys. I'm gonna get some more water, and I'll be back. Hang tight. Well, guys, you know the rules. Dead market, sit out, let it do its thing. Waiting out. Or short MHP, yeah. But I don't short below the DD band, so you guys know the rules. Market loves tariffs. Market shit the bed again at the open. Oh, yeah. Look at this crazy volatility. It's nuts, right? Dead market. Possible small long. Possible. Like literally possible. Gentlemen, you know the rules. I'm going to tap with some micros. That's it. This market's dead. Red line, non-leap. It's one of our impact red line. It's an illiquidity pivot. It's one of our classes that we teach. Is it still likely to close above DD on days like this? You never know. It's random. Only 8% of days close below. I wouldn't say it's likely. Not today. Kiki gap fill right here. Nothing yet. Matt made a t-shirt that has MHP line that says, I'd tap that. Oh yeah, I'd tap that all day long. I'd hit it 2 times. Now we're going to wait. I'm like a little quiet today because I kind of don't feel so good. I'm like lethargic and kind of tired. I don't know why. So I'm not my normal energetic self. I'm just kind of chilling. Maybe dead market. Made no trades today. No trades overnight. 0 loss, 0 gain, nothing. I'm way up in my tradeifys, which is good. Had a monster day yesterday. 27,000 total. Oh. I forgot to update the stream. The title now reflects that I had a $27,000 day yesterday. Okay. Well. Nothing to do. Did you win anything? Oh, yeah, you won all the contests today. How many drinks did I have? Not a lot. I was up really late, though. Like, really late. Shorts in favor today. Yeah. Microsoft Nanos. The Forex market has nano equivalents. They have the SuperTech 100, which is like the NASDAQ, and then they have like the Bloomberg 500, which is like the S&P. Boring day. Boring day. Don't let this guy overshoot. Okay. Okay, trade of 8. Am I high or something? Come on, there it is. Where'd it go? There it is. The electron microscope. Yes, for this market, exactly. Exactly. Double check that that's right. 5786. That's it, yeah. Let's take it. That's fun. Let's get that retrace, baby. This is gnarly, these candles. $800, 57.90, about 10 points overshoot. Not really that bad of overshoot. The 1 minute candles are pretty much, they're pretty on point with like a mild market. Let's get it. Let's rip it. Micros, baby. Nothing big. Just playing this crazy ass range here. Red lines are pretty stable on pressure like this. We could get, like I said, a big green dead cat bounce day. I'm not betting on it, but I am trying to bet on a retrace. Small long. There was no overshoot, which was good to see. We'll see. But man, it is pressure. This pressure is so crazy right here. QQQ also filled its gap and is supporting very well right there. What do you guys think? It's trying to move. Let me double check everything here. Gotta love our red lines though. Pretty on point. Oh, it's not picking momentum though. Scary. Trying to move, but dude, that NASDAQ Dom, look at this. Look how crazy this thing is moving around. Today is just crazy. It's giving me a headache. It's going up and down. Now it's starting to pick up a little bit of speed. This is a little scary here. There's the overshoot. A little bit more. One contract total. I'll stop on 10 lower. 57.78. I'll close. That's it. All right. I'm not adding to this, by the way. Yeah. Bye-bye. Bye-bye. That's why I just do one micro. Or one mini. A little crazy there. I don't know. I get the overshoot. Let's see if we can reclaim the pivot. We'll see. I'm hanging on still. That's why I just put micros around it. I don't want a bigger position than that. And that overshot a little bit more than I wanted to. That's why you do what we do, baby. Drew it on the screen. Overshoot. Hit that red and support. No more selling. Let's go. The 9 o'clock candle. We're here. Let's see if we can reclaim. Don't die today. Fingers crossed. Because if we reclaim this 57.86, there's a 40-point dead cat bounce ready to go. I know, just because it's all signs are bearish doesn't mean I usually wake up and start shorting. I take my strong pivots just for that potential, but I have like very little risk on the table. That's the thing. You guys see that, right? Even if I lose, it's like very little risk. The R&R is good. Markets don't just fall straight down. Like I said, just one. I'm not even doing I have like very little risk here. Just watch. All signs are bearish doesn't mean the market's going to go down. That's not how trading works. I'll teach you something. That's why you guys got to come to the courses. Yeah, all signs are bearish, but the market doesn't just fall straight down in a bear market. Just watch. Watch and learn, guys. It's all about risk and reward. You guys that are saying market's too bearish, listen. You're letting the shape of the candles make you feel a certain way. You're a step behind. Be a step ahead. Just watch. I could be wrong, but the R&R is there. That's all that matters. The R&R is there. That's all that matters. Just watch. Just watch. If I'm wrong small. If I'm right big. That's the difference. My risk is very well defined on this one. And again, it doesn't matter like if the market is choppy and volatile, sells off, crashes. Markets don't normally just fall straight down. I drew this morning. It's doing exactly what I wanted to happen. Just watch. Just watch. Just watch what I'm doing. If I'm wrong small. Just small. Small position. Small. I don't have a lot of risk on the table. So while the market could just dump and sell off, my job isn't to jump in and chase that. Here, pickle. Everybody has a question. It's all on my screen. It's literally drawn on there. So right here. This is the pivot, this is the overshoot, and then this is the support I want to see to move up inside of this range. Remember, I drew this before it happened. So this was drawn here this morning. And it's very easy as just walking out of the trade if it doesn't work. But the R&R is good. The R&R on this one is roughly like 4-to-1. So it's not bad. The downside R&R is hard to predict. So, and easily, that's why I just put one mini on it. It's not much. These illiquidity pivots and markets are very volatile, can be tremendously large supports. They can pivot, but it doesn't mean they have to. Right now it's losing. We're looking at these candles roughly 93 to about 15 points of overshoot is kind of what's allowed. Right about 70 is that overshoot range. Anything below 70, I just close out and walk away. And so like right here, I'm kind of like, well, maybe I don't like it, so I'm getting ready to trim. I'm gonna give it like 2 more minutes just to take a stab at this one. And then we'll close out if it doesn't work. But I promise you guys, the markets don't usually just open and fall. Even in bear markets like this, there's a setup I can take on these small longs here, but like I said, that's just putting micros on it. So that's why I put a little risk. Normally, it picks up a little faster than that. We have declining candles and declining volume. So this is kind of not really that dangerous. The volume was advancing the candles here, so I'm okay with it. But we'll see. Yeah, like I said, I'm definitely not thinking the market's bullish at all. All the greater market signals are bearish. All 3. Bear market. Let me write this on here so you know this. This is bear greater market. But bear markets don't just open and fall straight down. This one could, but it doesn't always do that. More often than not, your bear market's going to have really large volatility inside of it, which means big V's on the way down. Don't worry, I got a short in mind. Don't worry. Like the market is literally 1 moment away from dying. Like I'm talking dying, like crashing today. So I'm not going to sit here and hold risk and you know, blow up my account. But NASDAQ has also a pivot at the same spot. That's the one thing I'm trying to hit. So when NASDAQ hits this, it's likely going to have a little bit of a bounce too. These red lines are massive when it comes to support. So like NASDAQ's about to go same thing. I guess I just throw a couple micros at it. Not a big deal. To play that volatility, and that's something we like to do here. Try to see something that people don't see. So NASDAQ also has a potential right there. Here's the bounce. That's what I'm looking for. But if the market sells off, it's not a big deal. But I usually have to take stabs at liquidity. So I try to find liquidity and I long it when I find it. But if market's just opening and there is immediate bear market and bear pressure, it's not the smart thing to jump in and just try to chase a short as it's going to crash out. So if it falls from here, I usually sit out. My rule is I sit out of crashing markets. When it's dead, I sit out. I usually take stabs at liquidity though, even on the way down. It's pretty safe to do that. The risk is under control. I'll let myself lose like 1,500 bucks maybe total. But yeah, trust me. Trust me when I say there's method to this madness. You guys don't see me just doing goofy shit. I tell you guys to trust me. There's a method to the madness. I think Nasdaq's red line I also estimated because I didn't have the full. I kind of just guessed where it was. Yeah, this one I just guessed. So I'm kind of like in the vicinity. I didn't know exactly where it was going to be. So Nasdaq's could have been anywhere, and that's probably where it actually is. So those of you that are like waking up and saying the market's bearish, time to short. This is from a day trader's perspective. I'm going to teach you guys something today. So class, you've been through my classes. How many of days are, what's the percent of days that are red in a bear market? You guys know the answer to that. 50%. Bear market doesn't just mean fall straight down, fall straight down, fall straight down. The inclination is to see the red candles and want to short. I get it. But when I was new, I did the same thing. When you get experience at this, you're going to realize that the market doesn't just fall straight down. It moves down in giant V's, and you play the range like a pro. Now, where is that range I drew? Speaking of, $20,135. Where the heck is that thing? I swear, like my brain is broken this morning. 21. Okay, so this goes all the way back to like November, right? I'm trying to see where that candle is. Make sure I get it right. $2,200. Oh, that's way back here. Oh, there it is. Okay. So like somewhere in here is kind of what we're looking at. I'm going to say it's probably there. And again, I just estimating this one because I don't really know what's inside of this candle. But I'm just guessing it's somewhere inside of here on that event. I was really like really bad math, didn't mark it. But there's always bounce at these red lines I draw. So now, appropriately so, it looks like the volume is coming like right over here. But we'll see. I think this is probably where that bounce is. S&P has one at 57.61 as well. There's two of them there. And so we wait. Half of days that open like this, 50% of days will hit that red line and freaking dead cat bounce for the day. For whatever reason they do, once that liquidity is found on that little pivot there, the market reverses 50% of days. Literally 50% of days. It turns green. It's like a now or never thing. So this is it. Like we call these like now or never pivots. That's it. So here it is. Watch this. Watch the volume. Watch the move like this. So half of days will just pivot on a dime like right here. What now? We're waiting for the Nasdaq test all morning. Here's the volume. There's the level. Let's do a tick chart so we can watch it. See how strong that pivot is, right? So it's like now, or we call them now or never pivots. And the market's really, really brutal at these. Volatile and crazy. There's the overshoot, roughly about 40 points of overshoot are possible. Yeah, it's pretty brutal. So this is the overshoot I talked about. So what's going to happen is either you're here, you overshoot or not. And let's see what happens. Usually you'll get like a big green candle to test it. And then right here on the test, that's what you're going to see. So if it's a big red candle coming down on this market's going to literally crash today. So micros are all I'm just touching just a little bit just to see if we get that 50% pivot there. Market's trying to find some liquidity here. I'm just zooming in so you guys can see like the mechanics of this one. There's the test of the red. So half of days will hit this and dead cat bounce. The other half of days will reject this and crash. So what happens at this test is basically going to determine the rest of the day. This is the only spot, and this is the only liquidity that exists right now for a very long time in this market. Yeah. Like a very long time. Like if there is potential for this market to save itself, this is it. Hey, what's up? What up? Looks like we have a surprise guest today. Hey, what are you doing? We're watching to see if this market's going to crash or not today. We're going to see. What are you up to?
Sewing your button on.
Did you give a sewing kit for that? And again, with the Nasdaq one, I wasn't really certain where that pivot was because I was just kind of guessing on it. But if there is any hope for this market, that's it. So like I said, half a day's dead cat bounce off of this red line, literally half of days. One half of days. The other half will actually crash. So the idea is is that I usually take a small stab on this when it confirms and goes through here. I take the long all the way back up. And the other half of days I just take a small loss and then kind of walk away from this one. It's really fighting there though. Dude, I have been like needing a freaking button on that thing for the longest time. I have these pants that don't have a button on them that I've been wearing for years. The button has like, I don't know, the button like fell off one time and it was in the actual pocket for the longest time and we never had a needle to like sew it in. Where? Extra buttons? Like my favorite pair of shorts I've been wearing without a button. Dude, I just feel so like weird today. I don't know what it is. I just feel like so like. No, I just feel like blood pressure. It was weird. Yeah. Wait. 50% of days will hold that red line. There's the test. Let's watch it on the tick chart. Let's see what happens. Now the market's either going to crash from here or dead cat bounce and turn green. That's 50% of days will do it. Half of these days in general are green days in a bear market. 8% of days will close below this green band. And so the R&R is big enough such that I usually take that stab with just some micros. And if I lose out, then I lose out just a little bit. So we're watching it on a tick chart because this is how I kind of like when I'm looking at these really volatile moments, I kind of had to make my decisions based on the smaller movements of here. I got to zoom into the candle a little bit. I'm zooming this one on a tick chart as well. I want to kind of feel the flow. So, like I said, if Nasdaq holds this red line, you get a big flurry of green today. But if not, the market's just going to die, which is what we're watching for. Greater market is bearish. Yes, 100%. % bearish. But we'll see. We reclaim this 135 level. Nasdaq is like really the brutal force today. So we're going to watch and see if Nasdaq can rehold this line. Like I said, I love taking the bet that it does. Did I exit my position? No. No, not yet. I just put some micros at the dead cat bounce. Listen, guys, you got to learn. We're the best to ever do it. You got to learn. You got to learn what I do. I allow for the volatility. I'm accounting for the volatility. Put some micros, waiting for the line. I drew it all freaking morning. You just got to learn, guys. Just learn from the master. When there's volatility, you just account for it. That's it. Man. All these nerds coming in here trying to short at the bottom. Listen, boys. Listen, boys, you're here to learn. No, my position is still the same fucking position. I'm just watching the tick chart. The risk, I said, 1,500, 2,000 of risk is what I'm looking for. Boys, listen. Listen, you're here to learn. 50% of days, the dead cat bounce for hundreds of points is not worth not taking a stab on some micros. This is $5,000 if I'm right. $1,500 from one. Play the rally song. Okay. Now again, I don't bet that, like I said, it's a 50-50 shot. I know the odds. My risk is very small. Wait, somebody's praying for my downfall. Is that what people said? That's hilarious. Well, whoever said that, you wake up and watch traders on YouTube. That's probably worse. Whoever said that. I always tell the haters that they would trade places with me in a heartbeat. But that's okay. Let me show you guys something really cool. You guys ready? Hold on. I'm sorry. I'm just watching in a tick chart. So as I do today, as I drew this. All right, what time did I draw this? Like I said, I could be wrong. Like, an hour ago, I drew this V-shaped and said the word overshoot. Small, long, possible. Let me try something. I could, like I said, I could be wrong. Viscous contained. The R&R is amazing. Let me try something. Yeah, no, I feel like super flustered today, like my blood pressure's off. For some reason, yesterday was a very brutal day for me. Like my health is like important to my soul here. So about an hour ago, I drew this. This is an important pivot. This right here is a very important pivot. What I do is I draw it and then I do it. And then I draw before it happens. I have been given a crystal ball from Merlin himself, as well as some sword from some lady in a lake with feathers on her back. About, I don't know, let's see what time I drew this. And I look into the crystal ball. And I think this was like, oh God, how many hours? This is 45 minutes ago. I drew all of this, and as it's going down, and then I'm instructing, there's an overshoot possible. Like I draw the word overshoot, a little V shape here. Comments, time to short the market. Things are doing whatever. It's time. It looks like it's a bear market. Looks like it's a sell off. Fellas, look, come here to learn. Don't come here to teach. Okay? Okay? How you shorts doing, boys? I even play in the rally song. You got Merlin in the DMs? I do. Risk is contained. Trading small. Micro is fully planned. One tiny little position. I think what's the You guys are here to, y'all want to teach me something or what? I could be wrong, but the R&R is there, 4-1. You're gonna take a 4-1 trade, you're kind of nuts. If I'm wrong small, not a big deal. I can turn these 10 micros into like 4 grand though. If I get an 80-point rip in the S&P. And like I said, it could be wrong. There's the overshoot. Let's do that retrace distance right there just to see where I pulled it. Yeah. So like I said, I trade small to allow for this thing called overshoot. Well, that's the NASDAQ one, but we'll just kind of line up for the S&P one. And so I love that you guys tune in every morning and hang out with us. Even on days where I feel like my health is kind of off. Y'all hanging out with the big dog. Yeah, everybody's watching and trader on YouTube. Yes, that was the joke, Twitch Crunch. That was the joke. Hopefully you got the joke. Everybody here is watching and trader on YouTube. This was very obvious comment. So point I'm saying is that I make a fucking fortune trading. Absolutely. I made $27,000 yesterday, and my P&L today is $1,500 up and down. I drew this on the screen with the crystal ball that I have. I literally drew this before it happened. They call me Matt Stradamus. They do. They literally say this. My mom says this. You know, she tells me I'm special every day. Could be right. Could be wrong. Doesn't matter. I draw it on screen. I draw it before it happens. I literally draw all the things you see right here. See right here? There. On a circle with my mouth right here. I drew it, then I do it. Don't question the master. I've been looking my entire life for somebody in the world, literally somebody on planet Earth, or even the Milky Way galaxy. Let's expand the scope. Who can draw the stock market on their screen and then do it? I've been trying to meet other people of my kind, of my species, and I feel like Yoda. I'm like the last one left. You know what I'm saying? I live in this universe alone when it comes to the streamers. Anyone else you know that can drew it then do it? I'd love to meet them. You know what I'm saying? I'm like the last of my species here. And right here, we collect the comments of it. Looks like it's a bear market. Looks like it's going down. Looks like it's doing them. Yeah, sure, whatever. But, you know, 50% of days, this is going to move like 80 points up, right? And my 10 micro is going to make me like 4 grand with about a $1,500 whatever drawdown. It's about 4-1. It's amazing. Very high midi-chlorians. Well, usually, but today I feel like they're low. I feel a little lethargic today for whatever reason. The Matt Stradamus. Do any other influencers use Rocket Scooter? Yeah, tons of them. Trades with Matt, to name one, uses Rocket Scooter. Wolf Financial, Jordan, if you guys know Jordan, uses Rocket Scooter. Jadun uses Rocket Scooter. If you guys remember, y'all know Jadun. He's in the news right now. Ashton Nolan uses Rocket Scooter. Oh, a ton of people. It's very popular in the options world. A bunch of the guys in Stock Talk Weekly's group use it. Not on their streams, though, but they use it as like confluence. So usually these folks just want to know where hedge pressure is and monthly hedge pressure is to like see the bigger picture. People come in here and talk shit and don't say anything when the trade pans out. Well, that's just how life is. You always seem like The funny thing is the person that makes all the money is the one that everyone thinks is wrong at the start of the day. If the herd is usually the wrong entity. Yes, the market's selling off. Yes, the market's very bearish. Yes, the market could crash from here. The odds are 50-50, and the bet is small and the movement is big. It's all about risk management. So again, I'm well within the range of the risk I want to take. I'm not out here betting the farm. I'm not YOLOing this. I've got 10 micros. That's it. I wrote the word overshoot, planning for an overshoot. S&P had 2 pivots here. I was going to dive back in at the third one, but I wanted to keep my risk small because I'm okay with the 4 grand up and, $2 grand down in the worst case. So I didn't add to it, but I could have. And so that's it. It's called the internet troll. Like I said, man, when you're famous and you're good at what you do or whatever the case may be, people watch you and you'll have critics. But the critics, if you were to like say, hey, you want to trade places for a year? Every single person would say, oh my God, yes, I'd love to. And then I'd say, do I want your life? Absolutely not. I wouldn't take the trade. I'll take this trade, but not that one. So I don't really get shaken up. To be the smartest person in the room, you're going to be the person that the average folks think is wrong before you're right. And I could be wrong. That's the thing. I am saying the market's bearish and going down, but I still take that dead cat bounce trade every time I have to. It's statistics. So I gotta take it. If I don't take it, then I'm robbing myself of some really good potential. And like I said, my risk is well contained. I'm giving back a fraction of the $27,000 I made yesterday. I don't care. Let's see if I turn into a big trade. You know what I'm saying? It's all kind of control. Trades are profitable. No. It's well within the risk range. So it's like, it's planned. So here's that second retrace. Like I said, it might not work, but I have to take it because statistically it's not a bad trade. Why? Ooh. Ladies and gentlemen, I've got pants with a button. After 2 years of just wearing my belt really tight and having to adjust these things, I've now got a button. Thanks, Dolphins. Man, I appreciate you so much. I love it. How's my trade doing? Am I still within the risk range? We good? How am I doing? Is my trade, is the short panning out? Am I losing? I just sit on it. I'm curious. This market is crazy though. You have to understand, I've been trading bear markets for a long time. Very rarely did they just open and fall straight. And if they do, just sit out. Like I said. And if this is not working out, then we just close. Watch. I can just tap this and close it. Little reversal candle there, not the best. But if we get a dead cat bounce, it's worth being around for this one. Yeah, I don't know. Like, I woke up today just feeling off. I don't know. We did drink a lot the other day. I did slam a margarita yesterday before the stream, too, because it was just sitting there on the counter. Did you know that? I drank that margarita, the ones that were sitting there, because I didn't want them to go to waste. Yeah. So now this is where it's testing this level. And watch what I can do this very quickly. Watch, ready? If I don't like what I'm getting, I can always close it out. Okay, I'm going to be right back. I'm going to take a quickie little bathroom break. Don't go anywhere. How's my shorts doing? How's my shorts doing? My shorts back there. Show me my shorts. Oops. Guys, here's the only shorts. We're in here sewing shorts just to make fun of the Bears. We're doing this bit on purpose. Do you guys not read the fucking room? Come on. This was the joke. You guys, like, no, I went to go take a piss. No, iDoc is in here sewing my button on my shorts because the trolls were saying we're gonna short the market. Like, let me just show you what my P&L looks like today. Somebody's asking what's your P&L. Again, I've got 5 micros. This is all I got. Let me show you. These are my positions. I've got literally. Let me explain this one. I grabbed minis instead of micros because I'm a doofus sometimes. But this is my trade today from just the longs. I've closed everything out, but just this one is the only one that's left. So, like I said, I hit this one and then, you know, just waiting to see. Like, I'm still up for the day. It's like not a big deal. right? Again, that's it. That's it. Fully flat on everything else. So she was like, let me come in here and sew your shorts. That'd be so funny. Because people were like, you know, like I said, the market's probably going to sell off. No big deal. But when people are like, bro, it's time to short at the bottom, it's always the newer people that feel the market needs to do something when it's already doing it. If you chase something, yeah, you might be right. But you know what? I'm still making money for the day. And it's losing the pivot, which I don't like. So what I can easily do is watch this. Ready? I can just close right here. I can trim. So let's trim a little bit. Just a little bit. We are losing some of those pivots. Let me go back to show you on Thinkorswim where they are. Like I said, I already made money for the day. Just a little bit. Just trim a little bit. And so she's like, we've been talking about shorts all morning, and you guys, like, the joke goes everybody's head. So here's what we teach in the classes. Okay, ready? It's this. If you expect the volatility to be 10 points and you take one contract, class, let's all right, everybody here that's been to the boot camp, let me teach you something. Right? Again, I'm up whatever for the day. All right, so ready? What's our normal stop? Everyone type an answer. Ready? We're going to teach people here because people here are trying to learn how to trade. Let's teach the folks that don't know how to trade how to trade. Okay. What's my normal stop on S&P and NASDAQ? Right. 10 points ES, 40 NQ. So 10 ES. When the volatility is high and VVIX is above 100 and VIX futures are above triple B, what do I look at on the candles to decide the expected range of overshoot, which I draw on my chart? 30 points of overshoot is allowed when markets are volatile. You guys got to learn how to trade volatile markets. Spoiled kids learn how to do this shit in COVID and never touch the bear market in your lives. Welcome to Wall Street, baby. What do I look at to find out? The 1 minute candles, right? I look at the 1 minute candle to get the answer. It's weird that people think I'm angry. I'm making bank. I'm making bank today like I did yesterday. I'm in a good mood. But look at this. 58, 71. You've got 10, 15 points of candle here on these 1 minutes. So the idea is if you're going to take extra volatility, which you can allow, there are two pivots nearby that are within like 30 points of each other. Because I know the market can move 30 points additional, then I cut my position by how much? If my stop is one contract on 10 ES, then what would I do if I'm allowing myself 30 points of overshoot because of volatility? You kids want to just plant a trade and just sit on it and wait. Positioning around volatility is all you need to do. So what would I do with this, with a potential drawdown that's 3 times as big, 1/3 of the position? The math is, I know for some people, it's like you're not thinking you want to do math when you're trading, right? But you should do it. So because I'm allowing for a larger overshoot, I take a smaller position. My normal right now is 10. My medium right now is 5. My small right now is 2 or 3 minis. And my sit out is sit out. So class, what size position do I take at this red line? Remember, I told you with Tradeify, I'm stepping up. Small, which is 2 to 3 minis. So when I'm going to trade for a third of the position for 3 times the distance, can we divide 3 by 3 and equal 1? And that's what I did to account for 30 points of fucking volatility. Baby, come here to learn. Don't come here to teach. Somebody says 30 points of heat, bruh. Whoever said that doesn't know how to trade. Learn from me. It's accounted for the risk I'm taking. I'm in the range of risk I'm taking for a 4-to-1 trade at a third of my normally small position size to expect 30 points of drawdown. 3 contracts on 10 is the same thing as 1 contract on 30. It's not volatile markets are random. I'm accounting for the volatility. You want me to teach you something else? Because I knew it's 30 points of drawdown, count the space of this box that's been sitting here for 2 fucking hours. Is 30 points. Matchstradamus, baby. I'm well within my risk range. And, oh, wait, hold on, wait a second. I've also been scalping this NQ while we're sitting here. So I made another 3,000 bucks while we're sitting here. Just playing the range on NQ. So that's really, I don't know. It's so weird when you watch the person that's green. Here, let me just put this here. Like I said, it's just, I'm in one little spot right here. Hold on, ready? Let's do it. It's all, nothing is not planned. Nothing's not planned. This is 100% planned. Guys, that's it. That's it. There's no blowing anything. I could be getting blowed right now, though. You busy? She's over there sewing more shorts on the floor. Man, I always tell myself people that are angry, it happens on Wall Street. People get angry and they lose. It's totally fine. This has 7 micros. Micros. This is now 1/4 of my position, not 1/3 of my position that I take here. Guys, you might be used to like, let me just find a spot in long, find a spot in short. This is managing a position at an obvious liquidity point to take a stab. One account, I'm doing this in one account with micros, that's it. All the other accounts, how much is this today? I'm up 4 grand still. I appreciate the lessons, chat. Now, I appreciate the lessons, but no. See, here's the lesson. Let me teach you guys a little bit more math. The people that are saying probably blowing account. No, I've got this account is up like $9,000. $9,000. So we good. So here's what it is, right? Let me teach you a trick. I'm going to teach you guys how this works. Let me make this bigger so you can all see. I'm not touching anything right now. The idea is very simple. Because I know how the volatility is spread, I know that 30 points of drawdown is possible. This has kind of been sitting there most of the morning. So because 50% of days will do this and do this and do this and close green. Actually, where do we open? Probably over here. 50% of days, right? Only 8% of days close below here, and we have obvious liquidity points here. It's always worth a stab to take along. As a matter of fact, let me even show you to prove that I'm not just winging it. I literally have a diagram that I hand out in our classes that shows the exact same trade. With all the instructions, I follow the same thing. Strong pivots, red line. This is the red line. If you're colorblind, this is red. This is red right here. Small trade, longs only. Small trade for me is 2 to 3 contracts. Because the volatility is 3 times wider than my normal stop, I divide my position by 3 to equal to 1. I took 5 micros and 5 micros equals 1. And I'm in my position of 1. That's literally it. The trade can go from here all the way to there, and only 8% of days will close below that green line. Only 8%. It's called counting cards. In poker, counting cards are trading. It's just playing the odds. And because it's a very 50-50 sort of trade, all you do is just play it small. That's it. I can't be upset making money. I feel great. What is this? 2,000, 4,700, 5,000 minus 1,000. I'm up 4,000. 4,000. I'm not in drawdown. I've made $4,000. This is closed. You see these zeros? These are closed positions. So I'm up $4,000 today. There's no drawdown. What are you talking about? And I've only pressed the long button. When's the bear market over? Probably in May. Are these evals or PAs? What are you talking about? These are straight to funded. These are funded live accounts. Or sorry, funded accounts. These are funded. So this is real money. Or not real money, but this is sim funded account. So these are Tradeify sim funded. So these are funded. These are real P&L. I've already got payouts from these guys. I'm trying to go for live with these guys now. Nothing to come from Trump today? Nope, nothing today. Look, guys, I'm going to put money in my pocket all day, and you guys are going to watch it. Just watch the green. Learn from me. I'll teach you what I'm doing. It just sucks. Like, it just sucks that this market's bad, but. That's so great. So on the handouts, you guys are going to learn this. I have this right here. This is the trade I take every single time. I take it every time if I can. Small trades only, tiny little amount. Yeah, Trump is talking tonight. I don't expect Trump to do anything today. Excuse me. This is fun days. Fun days. So the account that's up 9K, somebody said that's up 9K overall, but the account that's down today, this one. It's down, you know, $1,300, $1,400, whatever. So now the balance is roughly closer to like, what, 6,000 something, whatever it is, or 7,000 something. My goal at Tradeify is to get $150,000 profit in all 5 of these accounts. And with that, I'm going to go try to get straight to live with a full $75,000 account. I already got a live ETF account. I'm going to be live at Tradeify next. I'm going to be live with whoever next. Y'all want me to go next with that? Top Step was, I think, the next one you guys wanted me to do. So I sit down on the shorts over here. Grave stream. Ever hear back from Apex? Yeah, so Apex basically told me that I failed my identification because apparently I took a picture of a picture and they said that wasn't good enough. Like, essentially, I had a digital version of it on my computer. I didn't have my wallet in my pocket, so I just zoomed in on my camera and then took it there. And then Apex was like, you can't take a picture of a picture. We need the real document. I was like, damn, that's cold. All right, so I got to redo it. Daddy got his wallet right here. Ready to go. Man, I hate making money. People get mad. I think when people get mad when you make money is because they don't. Oh, we got to do our TPT giveaway today. I'll tell you guys, y'all got to stop being mad. Y'all need to tune every day and learn the ropes. Every single day. I tell you, I draw it on the screen. I write the word overshoot way back here. I got a red line exactly where we're pivoting to the exact penny. I've got lines drawing where it's dead and I sit out of shorts up in here and I take a very small long is possible. And then I take a third of my position because the volatility is 3 times as much. It's all scripted. It's like Mastradamus in his crystal ball, baby. Ooh, 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 ooh. Why didn't they tell you before you do for a payout? I know, like literally the minute I'm going for a payout with Apex, they owe me like close to 10 grand. I was very upset that, you know, it was like payout denied. I was about to raise a stink with that, but apparently I'm the moron, so that was my bad. Apparently somewhere in the text of the rules, it says you must submit physical, whatever. Can't be a photo of a digital copy or whatever. I get it. Okay, fine. I'm the moron. Whatever. They better give me my 10K. Oh my God. All right, what am I trying to look for right now? Ooh, 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 ooh. Oh yeah, the contest with TPT. Now I feel like I'm gonna do one thing. The bot. Are you still sewing my shorts? Let me see. All right. So now listen. Who wears short shorts? Right here. Check this out. Like this right here, right? Wait, hold on. We'll see if she did a good job. So first of all, these are J. Crew, right? And they're 5-inch inseams, right? Because when it comes down to it, Daddy got some good-looking calves. All right, so I gotta wear some good shorts when I'm walking around the beach. You know, I put on, some good. You know, I have some good ones. Anyways, so the button broke, and I don't know why the button broke. You know, I party a lot. I get high a lot. I go fuck around a lot, and then shit breaks. Okay, whatever. But this guy right here broke, and I had this button in my pocket for years. Literally for years. It'd go through the wash, and the button would still be there because I was always like, let me get to it one day. And then I didn't realize because I forgot sometimes shorts will have extra buttons sewn on the inside, but don't make fun of me for that because it does have an extra button right here. But I was like, you know what? I'll get to it one day. I'll sew the button back on. It washed and the button still maintained its pocket composite, its, you know, repository for the button. Button was there. And for some reason it stayed in the pocket all these years. And then for whatever reason, you know, all this talk about shorts made us think, she's just texting me like, hey, you know what? I'm going to come sew the button on your shorts. And I'm like, that's funny because I keep saying the word short. So we planned this little comedy bit here. So she's still sewing the button where she redid it. And I don't know what she did that says it's different because it looks great. The button does what it does. It fits in the hole. I can squeeze it in. And that looks good. Does this work with stocks too? Absolutely, it does. So, wait, what's wrong with it?
Yeah, I'm not gonna see it. I don't want you to see it. I'll look for it.
Is it just here on the... You only did this one button, right?
Yeah.
I don't understand what's wrong. You sewed on a button. This is like beautiful. Now I actually have a button. I would wear these shorts all the time and just tighten my belt. And then they would like pull down and stuff. Horrible. Okay. So what did you do? It looks perfect.
No, yeah, okay. If you think it's perfect, I'm not gonna say anything.
Did you move it or something?
No.
Now I'm worried. You can tell me because you didn't mess it up.
No, it's not straight.
Wait, the button's not straight? What do you mean?
I don't know. That's how it is. I like tried it 3 times already.
Listen, guys. The button's not straight. Hold on. Zoom in, camera. It's a circular thing. How can it not be straight? Oh, you mean it's like tilted this way? Like the dots, instead of being like 4x4, like straight across? Like the buttonholes are like tilted like this? The pant seam is not straight. Well, I didn't notice. That's good. Oh, here's what she said. Here's what she said, guys. All right, look. Let me tell you something. This is infinitely better than not having a button. Thank you. Guys, would you care if the pant seam was not straight on my shorts? Yeah, I'm about to do the contest drawing. All right, last overshoot. Let's trim. Let's close. So my DD was roughly 15 to 2,000 on this one. Would you guys still be all right with the pant seam like this? Like, would anybody care? Is she hiding under the desk? Oh, you know she is, baby. All right. Losing red line. Let's... Well, let's not S&P check really quick. And let's cut. All right. Didn't work. But you know what's great? What's really great is at the end of the day, we're flat, and this is it. This is the total take home at the end of the day. So whatever that ends up being, and again, I'll hit it again if it comes back. 2, 3, 4, 5, almost 6 minus 8. It's still like 4K. So we good. All right. I don't think it's bad because, you know, it used to be 1,000 times more crooked because I didn't have a button on my shorts. I love my shorts. These are trading puns. We have a whole sewing bit we planned for you guys. Like I said, market could sell off, doesn't matter. I'm going to take the appropriate trade if we ever reclaim this red line here. Delete all that stuff. Now I'm fully flat. But you know what? I am fully flat with $4,000 in my funded accounts in my pocket. And greater markets bearish. But the thing is that dead cat balance is really strong. And by the end of the day, if we get it, we get it. But you know what's great? The market falls. It don't matter. Making that money today. I'm like what is like a 4-day winning streak now. This is great. They look like mailman shorts. They kind of feel good too when I wear them. I feel like I have all this freedom. Freedom down below. I can do the splits. I'm like Charlie from Always Sunny. People like, homeboy took 30 points of drawdowns. Planned. It's always planned. It never was not planned. Planned. Everything I do is planned. Plan, 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 plan. Again, let's go back to the tick chart so we can watch. Like I said, I always watch a tick chart. There's the bounce on NASDAQ again. Like I said, I probably got out early because I was being a wuss, but, you know, I'm still going to wait. At least for the S&P, one of the stronger supports is going to be back at this 57.86. But we're, like I said, we're going to watch. I had enough with waiting on that one with those micros. We're going to chill. It's planned. When markets are volatile, when we teach you in your classes, when VVIX is above 100 and when VIX is above triple B, you always go look at the 1 minute candles so you can see how much volatility you deal with on your oscillating around your pivots. Is what you do. So here's the rule, right? Let's look at NASDAQ. Let's look at S&P. Okay, you look at the worst 1 minute candle that you have in the hour. Okay, easy peasy. Back over here, it was this one. 330 NASDAQ down to 220 NASDAQ. That's about 110 points. S&P, kind of in the same light, but we're going to use the worst case scenario as NASDAQ was kind of the worst one. That candle, the S&P was roughly 57.93, 57.77. That's about 15 points on S&P. So 110 NASDAQ, 15 points S&P. My normal stop is 40. Like I said, everything I do is planned and everything I do works very well. My normal is this. So this is roughly 2.75x on NASDAQ, and this is 1.5x on S&P. The volatility is expected to move that much more. So when I look at two pivots here, this one can overshoot roughly 15 points, but we also have another pivot here. Both of them are long stabs. What I did was I built around here, but I ignored this one. Instead of adding to this one, I just held on to my tiny little position there. The fact that NASDAQ was 3x my risk, I went ahead and allowed for 3x my risk here, also because this was roughly 25 points away. So I've got 25 points between two strong pivots with another 1.5x or 15 points of drawdown equals about 40. So NASDAQ has roughly 3x its volatility. We have about 4. Oh, you can't see what I'm drawing. Sorry. 25 plus 15 is roughly 40 points of range from here to there. So because I know that explicitly from the volatility in the structure, I know that I can take up to 40 points of drawdown. 30 to 40, I didn't expect, but that's why I didn't attack this one with another batch of micros. So the idea was I told myself I'm just going to trade about 10 micros total and hold through potential volatility and allow myself to take that amount. Roughly $2,000 of drawdown potential to make roughly 80 points of rip if we go all the way back up to the DD bands that we're below, which is about here. I'm sorry, you can't even see what I'm doing. 80 points of rip is roughly right here. If we do get that position from here to there, actually it's roughly 90 points of rip, but 80 to 90 if my cost basis was in here. So that was all part of the plan. And so the idea is that you just plan your trade and do it. So the sentiment was when the market opened, I will always take a break on support on DD bands, always. On downside, I love to hit these yellow lines. Let's do 57.61 and watch me end up being right on this. I just didn't stick with it. So this is that expected range here. Inside of this range here. What is the contest? For some reason, this bot is so weird. Ends up 10 a.m. It doesn't post the winners. Maybe the giveaway here. Like, this is what it keeps doing. It goes, no winners yet, no time left. I got to click a button. I don't know if they changed it, but it hasn't been working lately. I don't know why. We might have to spin the wheel, guys. Let's look at it real quick. Boy, I'd love to get that dead cat bounce, so that'd be awesome. Yeah, it would be great. Dashboard. I think it's fun though. Let's see. I love these giveaways. Active giveaways, ended giveaways. Okay. Active giveaways. It says it's over. That's so weird why it doesn't work. And I don't know why. It like doesn't. It's so weird. All right, we're gonna spin the wheel. Whatever. Spin the wheel. Ooh, 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 ooh. Okay. Hold on. I'm gonna spin this wheel, baby. All right, we're gonna spin the wheel today. All right. Man, I don't know. Like, I woke up, I felt so weird today. I'm feeling a little bit better now that my coffee's starting to kick in. But man, I like woke up feeling like off, like lethargic, everything. I can't explain it, you guys. Go premium. I already went premium. I feel better though. So, all right. TPT. Who's messaging me? All right, y'all. You know the rule. You know the rule. Type in TPT. Yeah, you know what? This Dino bot, the giveaway ends and then it doesn't draw anybody's names. And I don't know why it's doing that. I don't understand. I don't get it. It's not selecting winners. And I don't know why it's doing that. And maybe I'm the idiot. Okay, clone. Yeah, I don't understand. Maybe there's something permission with the Discord. But it's like the contest is not, after it ends, it's not selecting winners. And I don't know why it was doing that. But we're going to spin that wheel, baby. We're going to spin that wheel. All right, guys, remember from the class, those of you who come to the boot camp, quickly. When there's a volatile market, you're in a non-ideal state of trading. See, I'm no rocket surgeon, but let me explain to you what I feel from the mathematical side of things. If you know the market's going to chop around at 3 times the distance, you can take a third of your normal position and hold through that chop. And it's the same as a non-volatile market, right? Where you expect your normal range, 10 points, S&P, 40 points, NASDAQ. We are still hovering at these pivots. Now, it's not picking up the momentum I'd like to see, but NASDAQ is really doing okay here. Now, it's not picking up a lot of steam to rally, which is absolutely fine. See, we have written that the market is greater bear market, and we've been the people that have been saying 40 points of volatility on the, or 100, 1,400 points of volatility on the NASDAQ was possible. We've already almost cleared 1,000 of that 1,400. 50% of days are green, okay, in general. And 88% of days close inside of this green band. Markets can sell off, sure, but I always take a stab where I can find liquidity to push it back into the middle. Okay? And if you fail the test, which this is the spot, these lines that I drew right here, I actually drew them months ago. These are illiquidity pivots. It's a really cool technique. It's been there for months. If you look right here. The 61 has been sitting there since, hold on, let me show you really quick. It's one of the best techniques. Imagine a month ago drawing support pivots that sit there, 86 and 61. When we get there, you're going to see that there is high volume at both of these pivots. It's predictable. Imagine predicting a high volume pivot months out. I drew these things, or you can draw them months out when they happen. When you approach the pivot right here, there's predictable high volume. And when you approach the pivot right here, there's sustainable high volume. There's a little bit of spikes right here. When you push through it, bounce off of it. Right? So the goal is that these are called red, we call them red lines, and I'll draw the winner in just a second. We call these things red lines. And they're a short form description of something called an illiquidity pivot. An illiquidity pivot, let me just clean everything up here. An illiquidity pivot has to do with the probabilities. Did you guys know that inside of these two bands that are based on the margin requirements, okay, in between these two bands, that 88% of days, like you see right here, close between those bands. Only 8% of days will close below. And every time the market dips below these green bands, I look for strong long pivots to long from, even in a bear market. In any kind of market, I will long every single time at a strong pivot because the R&R is fantastic. If I lose that trade, many days I can lose that trade. The one time it does take off of the 50-50 shot that you have a green day, red day, green day, red day in a bear market, more than pays off. These are usually 4-to-1 trades. I can lose this trade 4 times, and the one time it works, I win. So let's do a little bit of math before we do the drawing. 4-to-1 possible range. It's usually really big like that. Tell me, would you take it? Again, if I'm wrong, I'm wrong. It's 4-to-1 trade. Trade smaller to account for the volatility. Let's talk about that. We already do that. 4-to-1 trade at a 50% chance that the day closes green, which means we're up here. 50% of days will actually do this in a bear market. Number 2, 88% of days close inside of this band, plus the 4% above equals roughly 92% of days will close inside of here. So something that has these odds, 50% that we do that, 92% of days that we do this, which is much less. Well, it's probably about the same. With these odds and it being 4-to-1, just as a quick question, would you take that trade with a small position every single time with odds like that? Just as a math question. Lose a small amount each time. But if half the time it wins and you get 4 times your profit, you should take it because you're actually going to win twice on a 50% on a 4-to-1 to break even after 2. Actually, so let me do the math really. Forget what I'm saying. If I lose 1,000 every other day, 1,000, and then make 4,000, and then lose 1,000, and make 4,000 because it's 50%. I would never not take that trade. Statistically, it makes sense, right? Now, I may be I may be an idiot. I'm definitely an idiot. Thanks for some of my shorts, by the way. Statistically, I could lose this trade 4 times in a row, even with the 50% probability, and still walk away with profit or break even. So it's good odds. It's really good odds. So today, if we press this with volume one more time, we can close here by the end of the day. But this is sit out. So I'm sitting out for the moment. But all morning, you guys, as you see me scraping together some scalps, I'm just scalping in queue all day long on this. That was easy trades. I trade this pivot all day long. And day trading, where, like from the idiot's perspective, is let me pick the direction and make the money. But it's not what's going to happen. I mean, the market's gone absolutely nowhere, and my bank account's gone absolutely up. So the point that I have to tell you guys is day trading is not about let me pick the direction and make the money. See, no offense. I love all of you here. I do. I love all of you here. I do. All of you. Not only do I make more money trading than all of you here, and probably more than 10 of you combined, I make more money trading than the next 3 influencers combined. There's a method to my madness, so just stick here and listen. Like, people like to kind of like tell you what they think is going to happen, which I think is cool, open conversation. But there's a reason I do what I do. And I love you guys to death. And y'all are awesome by sticking around and learning. And it doesn't mean that I'm the best trader in the world. It just means that, like, I know what I'm doing. What I'm doing works for me. And so people come here and tell me what works for them is totally great. If someone made the money by waking up this morning and they grabbed their little short trade and then they made a little bit there, that's totally cool. Do that for an entire year, and then we'll talk and see how the results turn out. Statistically, I just play the odds. If I know there's a 50% chance of something, I got to do it. It doesn't mean I choose maybe not to do it or not do it. I have to do it. The odds are good. And why would I not bet on the odds? Because I can't control the outcome. The market's random. Now, the market is greater bearish today. Once I took the test of these trades, I tried here, waited through that, market bounced around a little bit, then I just pulled out of the trade. That's expected. But the rest of the day, I'm just scalping through this range, trying to get, 20, 40 points on NASDAQ. It's kind of easy to do. What charting platform is compatible with this? The Rocket Scooter platform, Tony K. That's the platform we're using. I'm the best trader Oh, shucks. But it doesn't mean that, again, trading is all about making money over the course of the year. That's all that matters. That's actually your goal, right? Yes, we know the market's going down. This is the first thing I wrote this morning. But it's very amateur belief, and I was an amateur as well, to believe that because the market was going down, it's still going to go down. And again, if it does go down, we avoid. And that's the first thing I wrote this morning, is I wrote something like this. I'm trying to remember exactly what I wrote. And I said, sit out, right? Sit out. I usually sit out right up here. I don't do any shorts. And I set it like long as possible, right? Oh, that's cool. What the fuck's going on here? Still trying to catch that liquidity, right? Do I? Let's just jump right back in. Let's have some fun with it. Why not? There's a good green candle to pump that liquidity. Let's try it. Like, why not? I'll risk it one more time. Let's see what's going on. Then we'll check the news here. This time I'll hang through it, you guys. I'm kind of okay with it. Let me just double check that I'm not missing something. And I'm only touching in one account. I'm not scalping anything else. Canadian PM, Justin saying something. Okay. I do like some big green candles moving on this day. Yeah, but I was like, sit out. Longs are possible. And that's it. I got to take stabs where I find liquidity and I long it. That's my saying. I find liquidity and I long it. I do it all the time. And again, right or wrong, doesn't matter. We got to see what's going on. The market is finding something here. I do want to maybe be risk exposed here. Now, this is interesting to see. And just this one account. Why not? Is VIX in decay here? A little bit of VIX. VIX is kind of still stuck in bull territory. Like I said, when I'm making these sharp decisions around these pivots, I got to zoom in on the tick charts. Tick charts, what I want to see. You mentioned about 4-to-1 in a P&L long term, but do you take 4-to-1 or just depends? Well, I actually will take it because it's a 4-to-1 trade that has a 50% chance. So the idea that the travel is really far, my position's really small. And so because it can travel far, I just take a small position. So I can lose 2 or 3K for the day and then make, you know, 8K when it wins. So it's all about the stats and the odds. So all of our stuff back test really well. You know, like we're a group of mathematicians that built a trading platform. We're different than the average, you know, YouTube child. You know, we all have advanced degrees in mathematics and engineering here at Rocket Scooter, hence the name. But, you know, like we're trying to put together something different. It's all statistically based. It's all math based. It's odds based, probabilistic. So we're catching that pivot. That's not bad. Boy, that volatility is crazy. I want to watch, see what we get over here. I'm just kind of watching the feel of the flow. That was interesting, that candle. Like I said, there's liquidity down here. You can't ignore the fact that there's liquidity here, guys. So for the folks that are like, you know, the market's short, this is what I tell new folks. It could be. You could be right. Like I said, the market's definitely selling off. It's not a bull market. It's a bear market. It's the first thing I wrote. But like at the start of the day, as most of the people that were like, I mean, let's just the elephant in the room. They were wrong, who come in here and say, well, the market's selling off. And then they troll for a little bit. But then they go away because that's what the average person will do. They will see a move and then try to get in at the end of it. And in trading, the only way you make money is by being first. That's it. That's the only way we're going to make money doing this. If you see the move and it's already moved, you need the greater idiot to come here and short. It's called the greater fool theory, right? So for somebody to come in and do something more foolish than you is the only way you're ever profitable when you do anything foolish. So, you know, when the market's selling off and you jump in, and remember, I'm gonna write this on here. There were people that came in my stream today and they were saying, bro, why aren't you shorting? God, Matt, I thought why aren't you shorting? Literally asking me today, why aren't you shorting? Right here, literally here. And since the moment my mods started banning the goofballs, the market has not sold off because it could, but it's not like because I see a bunch of red, I'm ready to jump in on the short setup, right? The goal as a trader is to find liquidity and long it, or find illiquidity and just get out of the way. And I must take stabs when I find liquidity. It's required because liquid markets don't normally crash. Liquidity buffers a crash. And as you see right now, liquidity is buffering this crash. For whatever reason, the market is finding a little love here because this is what happens at these red lines. It happens so frequent as I teach people here. And again, I could be wrong. We'll be humble. It happens so frequently that I made a flashcard like you would get a flashcard in elementary school. Like, this is a tiger. This is an elephant. Any questions? There's a flashcard with this exact trade on it because it is so common to provide liquidity in this environment. It is such a common trade that we made a flashcard for it. The odds are staggeringly awesome. And you're the first person when the market's crashing. And again, I'll take a stab if it fails, out of the way. Take a stab, fails, out of the way. Take a stab, guess. And I'm the one riding the market back up, and I'm the first one in when it's all the people that are chasing the short are the ones that are providing exit liquidity to me as I laugh all the way to the bank. And I have to talk, serious talk, baby doll, baby cake. Daddy ain't playing. It's my Krusty the Clown sigh. So, right or wrong in trading doesn't matter. First is what matters. First is what makes the trader make money. First makes the mortgage payment. First puts gas in the Maserati. First buys Pickle a Dior harness. Was that right? Is that what he got? My dog wears a harness from Dior, and that motherfucker's bougier than I am. I wear crooked shorts from J. Crew. Okay. I'm gonna tell you, this dog is like bougier and shit. Like this is me. I still dress in a super humble manner. I mean, I've got a, you know, I got a nice collection of like 12 different pairs of Louboutin shoes, but I digress. I wear crooked shorts. No offense to me, but I wear crooked shorts from J. Crew. But the point I'm saying is, comedy aside, you do all know the score, because in trading, that's all that matters, is the score. Do we all agree that some goofballs that came in here and were like literally heckling? I'm going to tell you guys every single day. Long market, short market don't matter. Long market, short market don't matter. There were people who were like, bro, why aren't you shorting? I don't understand. It's a bear market. And it's because you don't understand. Bless your heart. And I wish people would watch the YouTuber that puts up the numbers and ask instead of tell. I only ask you that favor, friends. Ask, don't tell. Tell me what you think, but I appreciate the coaching. I do. I really do. No thanks, but I do. I'm still a student, but to the shorts. So in the longer scheme of things, hey, maybe people are right? Maybe the three people are right, but I have to be very, very clear. And I'm going to do a little trick. I'm going to teach you guys something really neat. So by the way, if you guys don't know who I am, my name is Matt. I'm a mathematician with an advanced degree. I have a degree in chemical engineering, subspecialty in reaction engineering. I specialize in catalyst, reaction engineering, reactor engineering, optimization, and economics. So these are all my sub-focuses as a reaction engineer. Mathematics, you know, like I was a kid that took the SAT when I was 12 and got a perfect math score. This was me. The only reason my parents didn't advance me through a bunch of grades because my mom wanted me to have a normal life. My dad wanted me to graduate high school when I was 15. So, you know, I grew up kind of like that weird, nerdy math guy. And there's a method to my madness in trading because it's based on my weird, nerdy math self. There's a process in the market that's called like liquidity. Liquidity is where buyers and sellers find each other and increase frequency. So the example is if buyer is here and seller is here, then the market has to move really far to connect the dots. That's a less liquid market than if the buyers are here and here. Another thing is if the buyers are really spread out in time. Like examples, I bought a house at 100K, right? Because it's like a $500,000 house. And I were to flip it by doing some investment, put 100K into it, and then flip it for 5 and make 3, right? So that's a great return. But the problem is if it's in the middle of the desert and the probability that somebody comes and buys that house from me is very low and it's going to take me a year to make it, then there's a time part of liquidity as well. The market is illiquid because of the lack of frequency. Liquidity is the frequency at which transactions happen. So it has a twofold approach. Both of the factors that limit frequency have to do with how often the trade takes place, and that has everything to do with the lack of buyers and sellers in general or lack of buyers and sellers in the vicinity. Both of those things provide illiquidity. If there's a million buyers or sellers and they're spread really far apart, then it's illiquid. If there's no buyers and sellers, no matter where they're spread, then it's also illiquid. So the goal that I'm saying of me is to find liquidity and long it. Everybody ready? I'm going to say this in chat. We are going to find liquidity. Everyone ready? Write this down. You're going to find liquidity and you're going to what? Dustin said the nerdy white math guys always get the good looking Asian women. Get up, babe. Get over here.
No,
Let them see your pretty face. He ain't wrong. Hold on.
I'm a mess.
Hey, not only good-looking Asian women, this chick's a doctor, okay? And I long it. Oh, so I'm apparently dating the little Korean girl from The Ring that came out of the TV.
She's Japanese.
Oh, was that? Oh no, it's Ringu. No, what was the Korean one where they came out of the mirror? Ring was Japanese. What was the other one? The Grudge.
That was also
The Grudge.
that was also Japanese.
Hold on. All right, you had a boogie.
That was also Japanese.
She's Japanese. Anyways, they said the smart math guys get the good-looking Asian girls.
It's always the losers that win.
You hear that? From the girl's point of view, it's always the losers that win.
Yeah, it's always the nerds that end up marrying the hot ones, and then the really popular ones in high school that ends up with a beer belly.
It's because we make a lot. Is it because we make a lot of money?
Huh?
Is it because we make a lot of money? Is that it?
Of course it is.
See, guys, let me tell you something. Let me tell you something. Thanks for sewing my shorts, by the way. How are my shorts playing out? That's the whole run up to that joke was for me to ask, how are my shorts doing? And she's supposed to go, we get scripted this better. She's supposed to go, oh, your shorts are doing fine, by the way. And by the way, we've been wanting to sew the button on them shorts for fucking years. How's my trade doing? Oh, now it's going green. Hold on. So let me teach you guys a fun lesson about this. I use the Rock Scooter trading platform. Apart from the theatrics, we're a team of engineers that built a trading platform. We're actually pioneers in the field of study of gamma exposure. We're very well respected in that community. We've created tools. Oh geez. Oh geez. Oh gee. Oh geez. Kirsten said the cutest guy in her high school works at a car wash now. Yeah. That's a nice little retrace. Wait, was that the retrace that I wanted to get? Like I said, we're just going to scalp this back to green. Let's see if we can't get it. No, that is still in the range. Let's be hit. That tested the gap fill. Let's close out for profit because that is gap fill's first pivot. How are my shorts doing, by the way? Are they good? Okay, they're good. We find liquidity and we long it. Liquid markets don't crash. Liquidity buffers a crash. This is an illiquidity pivot that was created by an illiquid move to the upside. A massive amount of buyers kicked the dealers short with hedged long options and long call options and like that at this exact spot. This is a very, 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 very key pivot. As new sellers are entering the game and old buyers are supporting here, this is an extremely liquid spot. Let me teach you an example. Let me go to like a clean chart. This pivot we teach in our boot camp. Our boot camp is the most sophisticated trading education you will ever have. I will teach you guys if you just join in. Man, I feel like my coffee finally kicked in. I don't feel crazy, like lethargic anymore. What do you think caused it, babe? I had a severe blood pressure drop, I think it was. So we have this boot camp, right? And I don't really want to like sell a trading course for a lot of money. It's $20 for 20 days. It's $1 a class. And there's literally, oh, we needed the take profit giveaway. Let me roll that dice in a second. There's literally like, you know, over 1,000 people have taken the class. And then most of them come and leave reviews and you can go read yourself. These are all people left reviews after they took the class. As early as, you know, like whatever, 6 months ago. And we teach these processes of finding liquidity in the market. Liquidity is vitality. Liquid is great, right? Okay, so the point that I'm saying is that what you're looking for here, and this is an educational moment, is that, and I have all of my illiquidity pivots marked on the way down. Imagine this. I have them all marked since COVID. I've got years of these things ready to go when we get down that low, okay? From this moment in time, there is that pivot. You can draw them as they happen. I'll show you how to do one. We can keep going as far back as you want. But even below here, oops, we got some down here. There's a trick. We're exploiting a really neat thing. Now, let me show you what's going on. A long, long, long time ago, the red lines, Timmy Spanksy, that's what they are. Anytime you get a news-driven event, okay? Everybody's longing and nobody's selling. The ask is getting attacked by long market orders, okay? Because there's not a buffer to that illiquid move, the dealers host auctions off the level 2 for market makers to, or the exchange hosts auctions off level 2 for market makers to inject liquidity at that spot. You learn everything about how Citadel works and how order flow is interrupted by these dealer intermediaries, okay? And so in that moment in time, there are firms that jump in and provide that liquidity to your trade. An illiquid moment needs sellers for the buyers. When everybody's buying, there is a whole lot of short pressure here. So far, so good. Tell me everybody understands so far what that means. 10,000 people went along on the good news and there's nobody to short. Well, enter Citadel or someone else to jump in and sell to those buyers. It is the same thing as a market imbalance. You nailed it. We got this, right? Okay, so imagine as a giant accounting system, there is somebody short this entire time because there's somebody long this entire time. If you were engaged in a long position, somebody is short to you at all times. The person that sold to you is short to you. And if they got out of that trade, then someone else is short to you. Do we all understand the idea that there is always somebody on the other side of your trade at all times? We understand this, right? Or somebody sold it to you and they got it off their hands and now you just hold that. The person that is short to you is the person that you end up selling to. So at some point when you exit that trade, there's always somebody on the other side of that trade too. It's not always a short, but the point is that when you get out of the trade, there's always somebody there. Your unrealized gain is somebody's unrealized loss. There is 100% always somebody on the other side of your trade. If you're just holding a share, then there's nobody on the other side of your trade. But when you sell it, there is. Okay. Yeah, it's not always a short, but the point is that when you're out of the trade, it's always a sell. So you are racking up unrealized gains, and somebody out there is going to take a realized loss when you sell. That's it. And whether it's combined with the million market makers as a short as past hands or somebody sold to you and you're holding on, and when you sell, you're long, a dealer has to jump in and buy it from you at the top or cover their short at the top. Whatever the case may be, if they were short covering at the top, then they lost and you won. If they buy from you at the top, then you had a realized gain and now they're holding risk of long at the top. So it's a zero-sum game. Yeah, but stocks are not, because in the case of you holding something, there may not be someone on the other side of your trade until you sell. And so the unrealized gain passes from hands to hand. That's just the point I'm making. Okay. Now, the point I'm saying here with this understanding is that let's assume that everyone is shorting to you now in this instance, right? So let's pretend that all of the risk is contained in a circle. Let's just make that assumption for the case. As people are pointing out, a stock is not necessarily a zero-sum game because you're constantly owning something. You can pass stocks in a triangle and everybody can go up in value. Until the final person sells and nobody in the triangle buys. Then that realized gain is realized in a loss. An example is if I sell to you and you sell to someone and they sell to someone, it's called circular trading. Everybody's bank accounts are going up circular trading until the last person tries to sell and there's no liquidity. Have you guys ever watched the meme coin world? When you try to sell and there's no liquidity, you sell at what price? Zero. So two people in the triangle made a fortune trading in a circle, and the one person that sold to nobody lost equivalently the same amount that everyone else in the circle gained. So this is the part of how at some point when there's no liquidity, somebody in the triangle takes the loss. And that's the point I'm making. Okay, so let's make the assumption. Wait, the cutest guy, the line from The Social Network, the cutest guy in your high school works at a car wash now. That could be a line from The Social. That's one of my favorite movies, by the way. I love that movie. Okay, so let's take the assumption that everybody longs and there's nobody buying. Nobody's selling. So someone had to short to you. So let's imagine an accounting system of somebody just really short all throughout this day, right? There's some kind of imbalance that's taking place as somebody's short. And let's imagine those shorts bought some calls to balance out, okay? And they're delta hedged, so the trade is ultimately neutral. And now they just buy insurance every month. They're going to refresh those calls to hold on to that short, okay? And you're long all the way up. So there were bulls here at the bottom. So I'm going to write the word bulls right at the start of that news event, okay? Bulls are right here. Now let's scroll over in time as the market conditions have shifted to a space of now where there are sellers. And let's do everything in reverse as we did earlier. Remember, there's still bulls hanging on to their longs. Now here, there are now new sellers, right? And then the same thing is applying. People are selling, and now there's not a lot of buyers here because there's very little liquidity. So again, the exchange hosts their little auctions, and the Citadels and whatevers of the world jump in and inject the liquidity, and they long. And let's say they go out and buy insurance in their longs, delta weighted puts, and now they're sitting there with a neutral position on the downside. Case in point, market maker in this example is neutral. In this point, market maker is neutral. They're neutral both ways. The puts they made are making money. The calls they bought are making money, offsetting their exposure, providing liquidity. Perfect as that. Now you have the people that are selling, they're otherwise, or shorts, right? Let's just assume they're shorts or selling, whatever. We'll say there's bears here. Let's assume that it's all bears and bulls, not just the not bulls and not bears. You guys took the class, but let's say just bears and bulls. Shorts against longs. And now the market is pricing down. Anywhere in between here, all of your bulls are somewhat making money. All the people on the way up are now profiting through here. And now everyone here, all the bears are profiting through here. And in the overlap in the middle, there's just a range at which for the maximum amount of people are probably breaking even. Only the bulls that got in first are making money in the middle. And only the bears that got in first are making money in the middle. As the market presses down here, more bulls are getting squeezed and more bears are winning. As the market presses up here, more bulls are winning and more bears are getting squeezed. And right in the middle is the maximization of where bulls and bears are. So if bulls and bears have maximum gain against each other, and again, the market goes up, fewer bears, more bulls, market go down, fewer bears, more bulls. So the balance point of the maximum amount of winners is likely somewhere near the middle. So, all right, how many people here found liquidity and longed it? I closed my trade out because the risk was weird. But, you know, had I held my guns, boy, oh boy. Boy, oh boy. Oh, I'm sorry. Here's the final print of the day. Be fully transparent with you guys. I took another NASDAQ scalp earlier. This is the one I babysat with the micros, didn't work. These are the ones I just scalped. Those don't work. So that's it. That's the final for the day. Okay, so opportune moments. The indicator is this red line. I'll tell you how to calculate it. I'm teaching you that right now. Okay. So anyways, how are my shorts doing? Are they still crooked? All right. Where are you going?
Office 10 minutes away.
Don't leave me. Don't leave me. Chat, tell her don't leave me. I'm needy. All right, bye, hot Asian girl. I'm going to make more money so that you love me more. All right, see you later. What time are you coming back? Okay. All right. So here, you have bears and bulls in the middle. So what happens is the new sellers meet the old buyers. And if you think about a dealer that was short way up here and hedged, and now right back here, tell me what you notice about the dealers down here. Then let me explain this to you. Imagine dealers can hold short or long upside down forever. Okay. So if the market was to go way up and you're short and upside down, and the market was to fall all the way back to here, the dealers now are back to even. They were selling to you because there was no seller. Aha, now they're sellers. They can get out of their short by covering the whole way down or covering right here. At the dealer neutralization point, the dealer can now break even. Their job has been completed. Buyers needed sellers months ago, and they didn't have them. But buyers have sellers right now, and now they've matched. Now the dealers can be hands off the market. Buyers and sellers smash into each other right at the middle. And liquidity is found. Red line is a balance point of an old imbalance that's now able to rebalance now. It provides liquidity. I always will likely long when I find liquidity. And when the goofballs come in and start to say, well, ain't you shorting? Stop listening to the goofballs. Yes, the market is selling off. Yes, they're shorting at the bottom. Yes. Trump's in office. Can I use the hard R word now? They're regarded. They're absolute regards, okay? Literally. There are so many fucking morons with COVID, since COVID, that try to get up and try to do what I do for a living. Yeah, let's do the contest. There's a lot of people that just want to make sure that you know how stupid they are, and they come out and vocalize their stupidity live on stream. It's just, bless their hearts. I mean, I swear to God, if only they'd come in and ask me a question, I would teach them just like I taught you guys. Was this a good lesson? Basically, sellers find old buyers, and the market is neutral here. It is such a strong trade that we make a flashcard for that very trade. We hand this out. So if you guys are wanting to know what our boot camp, the $20 is, it's a handful of these type of handouts. And it's 20 videos for 20 bucks. It's like buying the best trading book you've ever seen. Not only does it tell me position sizing and direction, and there's the long, small off of red line with an 8% chance that it rejects this and sells off, and a 92% chance that it goes up inside of there. That's what we teach. You make an engineering like team that puts together stock market stuff. It's going to be slightly different than just goofballs that look at red candles and go, I think it's time to short. Well, I'm going to tell you something. Liquid markets don't crash. Only illiquid markets do. So I find liquidity. It's like the rocket scooter motto. I find liquidity and I long it every single time. Bear market, bull market, doesn't matter. Monk, your name is Michael? You're with some with GC Day. How you doing, man? Killing it. Hold on. I bet you I can say it. Munkstertot? Munkstertot? Am I saying it right? I'll call you Michael, though. Or I've been calling you Monk for short. Am I close? Is your name African or Egyptian, or kind of has that what's the word? Not phonetics. The way it's spelled has the resemblance to some of my Egyptian friends. TPT, guys. We're going to spin the wheel. Type it in, type it in, type it in. We'll call you Michael. These are 50K, 50K something accounts. 50K something. All right. Victor, what did you win? Victor wins the whole price. Get ready. On your mark. Hold on. Hold on. We're not doing the drawing without the... I'm so glad I got my energy back. Guys, I'm going to tell you, there's something like physically wrong with me sometimes. Like it's like chemical something. I think I had like a blood pressure drop this morning. You guys see me on the stream, I probably look dead. I kept going to get water because I had this like sudden, and I can't explain it. I know a lot of you guys in here are potheads, so you might know. Like, you know, when you get like really high on like Delta 8 or something, your mouth, or like sativa, your mouth just gets like rock and dry. I'm not on any weed or anything at all, but my mouth this morning was getting dry. My earlobes were starting to feel hot. It was so weird. Again, this is the same things I had last year when I had my crazy. I was hospitalized a bunch for high blood pressure. I went up as high as 200 over 140. It was ridiculous. All right, we're gonna spin the wheel. Yeah, they had like my earlobes were hot, my mouth was dry, things were getting like spacey and slow. I was like, did I get roofied or something? It was weird. But it was, I think I had a blood pressure drop. Matt, are you skipping my messages or just can't see them? Oh, hold on. TPT. Why spamming TPT? Oh, because we're having a contest, a giveaway. Take Profit Trader. Print that money, baby. Guys, this is why you come to this stream. Button looks perfect. LOL. How are my shorts doing, guys? Well, the button's on clean. Did y'all like the short bit? All right. So, jokes aside, you find liquidity long because it's the perfect thing to do. In bear markets, 50% of candles are green. These bands, 8% of days close below, 88% of days close between, and 4% of days close above. I always will long liquidity. I don't care what environment we're in. And it's the newbie traders that come in and see something move and they want to buy it. It's your grandma that sees, should I buy Bolivia coin? Hey, Junior, you're a trader. What about this Trump coin everybody's buying? Can I buy it with you, Junior? This is when your grandma is calling you about Melania Trump coin, okay? This is when the people that started trading in COVID started shorting the market. If the market reverses, whichever day it does, it will always reverse from a point of liquidity. So on the way down, here are places where the market could reverse if it did. Pick your poison. 153, 19, 18. There's really nothing in between here, which tells me if we lose this, it's pretty gross, okay? But on the way down, I will always, 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 always take a stab at every potential dead cat bounce reverse point. So everybody knows today. Let's do the drawing. Do we all understand the lesson? 5, 4, 3, 2, 1. Jay Mooney. Victor finally won. Congratulations. Victor spelled Jay Mooney. V-I-K-T-O-R. Congratulations, Victor, the winner of the... All right, so today is different. So we do so much take profit that we can do giveaways now. And we do so much with Tradeify that we can do giveaways now. Cross your fingers because I have a personal meeting with Brett Summa tomorrow to talk about this. I have an idea that I want to explore with him. And so we'll see what we can do. As you know, we love Tradeify here. Jay Mooney. All right, what's up, bro? Okay, so what you guys have to do, go to Discord and you have to send me an email for your Take Profit account. So they credit it to your email. That's the way they do it. I can't just give you a code. You got it, J Mooney? So I'm going to see if Brett can give us a deal to do giveaways by some degree. Monthly would be awesome. Weekly would be great. Take Profit is monthly. Womp womp. ETF, we do weekly giveaways on Friday. We love ETF here too. They're one of our faves. All right. Round 2. Let's go. That you, Jay? Hello. Hello.
Can you hear me okay?
Yeah, Susan, I can hear you great. How's it going?
Well, I am with one of the providers for Medicare Health Center, and based on our records, I showed that you may qualify for information for ways to reduce or even eliminate the cost for healthcare expenses.
Is there any way I can lower the cost of my funeral expenses as well?
Okay?
I have a cremation plan for like 50 years from now. Can you help me with that? Susan,
I'm actually not trying to sell you anything. I'm calling because based on the records, there's actually no cost for our services to provide you with just more information.
That's amazing.
So this is not going to take much longer at all, okay?
That's amazing. So one question I have for you, Susan. How well do you think Jay's going to do on his TPT account? Okay. All right. Jesus Christ. Fucking people. Memorial Hermann Hospital. Always calling you up. I got to answer it because you never know if like it's your mom got in a car wreck or something and you pick it up. Hi, blah, blah, blah. Don't worry. All right. Moro, bro. Guys, we did the drawing. It's over.
Is everything okay?
What?
Oh, did you scream?
I always scream.
Oh, God, I thought you fell or something.
Wait, what happened?
I don't know. I have half makeup on. I heard you scream. Thought you said, babe! Like you fell and then you were like, and I had this imagery of you hemorrhaging on the floor. And then I ran upstairs.
Come here. You need a hug. Come on. Thank you. I scare you. No, oh my God, no, I'm always yelling and screaming. But I mean, one day I will have a heart attack, so I'm glad you're up here to check on me. Sorry to scare you like that. Yeah, you're right to check because one day I'm just going to stroke out and just
don't say that.
fall on the ground.
Don't say that. Come on, Chico.
Guys, stop. Oh, did Jay not type it? Jay, are you here? Hold on. No, guys, you only type it one time. You're in the contest. Ask her if Moro is going to win. Moro is trying to put his name like in the fishbowl. There's like 95 of his business cards. Did Jay type it? Jay, are you here? Was Jay not here? Jay, my man. This is turning to OnlyFans fast. It's hilarious. I identify as Jay. It is 2025. You can be whoever you want to be. I'm about to identify as the guy that's going to click this button one more time. Okay. Oh, poor Jay. Jay's always here too. Your name is Jay Mooney. You'll take it. Nah, this is hilarious. Okay. One more. Francesco. There we go. Literally almost touched Jay's name again. Congratulations, Victor. You finally won the prize. Jay Mooney, send me an email, Discord. Awesome, bud. This is my first time doing a TPT giveaway. So all they said was I just give them your email and that's it. Francesco, baby. Oh shit. Okay, Jay's here. Okay, crap. Hold on though, but Jay, we had to spin the wheel again. Okay, Jay was here. But Francesco's the winner of the TPT. Jay, we got to give you something. So how about this? I'll let the two of you decide. One of you should win something. Jay is back. I give people a 1-minute grace period because of the stream. Is Francesco here? Okay, let's ask him. Is Francesco here? Maybe he's not here and you win by default. Yep, we'll give it to Jay. Jay, my man. Whatever happened to like, okay, guys, let me ask you one question, and one question in all honesty. Can you guys rate my trade today? I mean, literally rate it. Now, again, I scared myself out of this one just because it was taking a second dive and I closed. But I still maintained the position as in the other accounts I was scalping in, just on the side. But demonstrating the risk and the risk management. Can you guys give me a rating on my trade, on my performance? Did I do the following? Remember we talked about trade plans? Did I assess, is the trade worth taking? Or like, should I take it, right? Should I take it? Do I have any sit-out rules? Right? Should I take it? Number 2, identify direction. Long versus short. Number 3, risk and reward. Number 4, assess the dollar amount that you're going to lose. And tell yourself, is it okay? So long or short, risk and reward, which also includes how you enter, how and where you enter. So accounting for volatility, everything else, position size, all of that. And the amounts you're going to lose. And then number 5, you ask yourself one more time, repeat of number 1. Do I take it? How did I do? On a scale of 0 to 10. Should I take it? There was no catalyst. There was no irrational that told me not to take it. Long or short, I chose long. Risk and reward, I said it's a 4-to-1 trade. 4-to-1 trade. I staged in a 1/3 position size on my small at the red line, which followed the flash card. And my amount, I said I'm willing to lose about $2,000 if I'm wrong to make a 4-to-1 trade if I'm right. So on a scale of, if R&R is correct, if you exit early, yeah, so I closed out because the market was pressing a second time into my stop area, and I just decided to pull the plug, even though I was right. And that happens sometimes where I just closed early when I was right. So on a second break or third break, wherever it was, I finally gave out of the trade. But then when it reclaimed, I got back in, right? So on the planning side, where the goofballs are like, he's holding drawdown, and then I'm like, I'm cashing checks. There is a method to the madness. It's not just holding drawdown, it's planned. I was trading micros, which you don't see me do, because I was trading a third of my position to handle a third, 3 times the volatility. You traded against the trend. I'm sorry. Let me exact you. Can you describe what a trend is to me? All right, guys, everyone get out your abacus. Okay, ready? I hate when people say this. Get out your abacus. We're going to start counting, okay? Let me show you the trend. Ready? Hold on. We're going to start. I'm going to tell you. Okay, ready? We're going to start counting. Okay? Tell me about the trend because we're going to count. Ready? Red. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 4, 5, 6, 7, 8, 9, 30. Uh, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 40. 1, 2, 3, 4, 5, 6, 7, 8, 9, 50. 6, 7, 8, 9, 60. 1, 2, 3, 4, 5, 6, 7, 8, 68. Okay. Now let's talk about the green ones. Let's find out what the trend was. Starting at the start of the day. Ready? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We'll count down to 12, 13, 14, 15, 16, 17, 18, 19, 20. 1, 2, 3, 24. So even at the point of entry, there was roughly about the same, but slightly more red, 24. 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Wait, no, sorry, 24. Sorry. 25, 26, 27, 28, 29, 30. I'm blind here. 31, 2, 3, 4, 5, 6, 7, 8, 9, 40. 1, 2, 3, 4, 5, 6, 7, 8, 9. 50 was here and 50 was here. So at this point, there's more green candles than red even here. So let's keep counting. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, or 62, 3, 4, 5, 6, 7, 8, 9, 70. 1, 2, 3, 4, 5, 6, 7, 8, 9, 80, and etc. 80 plus. So again, you don't trade into the trend. You see the trend before it happens, and then you're right as it happens. Trading only pays out if you can do that. I teach a masterclass in how to do that. How can I truly define your edge if you don't set clear rules on your stops? I set absolutely clear rules on my stops. Are you kidding? Hey, everyone that's taken the boot camp, tell everybody about my rules on my stops. Just tell them. I literally have clear rules on the stops. I've mentioned it 30 times. I've mentioned it a dozen times today. 30 points below lowest pivot. 10 points ES, 40 points NQ. Systematically. Dude, I picked up this. Look, guys, look. I peaked top 5 in the Robbins Cup, Global Futures Trading Championship, okay? I won the last trading contest I entered, first place. A month-long ETF contest, I won that. I picked up, what is this called? Tradeify. Tradeify. I don't even do trader funding programs. I picked it up and immediately got a payout in the first 10 days. I have an 85% win rate, and it's public. I post my broker statements. I post the performance reports. What's my stop? That's it. My stop was clearly defined. There is 2 points of liquidity on this chart. I allow 30 points of drawdown because of volatility. Does everyone understand what volatility is, right? You never see me set a stop loss. I don't set a stop loss. That's for newbies. I know where I stop out and X the button. You guys read too many fucking trading 101 books written by loser traders. Guys, like I popped 7 figures last year. I'm going to pop hopefully 8 figures this year. Stop reading garbage. Stop is important, but setting a stop loss in your broker platform is for newbies. I control my stop by pushing the button like I did. I told you today I'm going to lose 2,000 if I'm wrong. I don't set a stop loss on a platform. I get better control without doing that. Like Mars, I promise you this. No pro trader is going to follow some things you wrote in, but everybody's going to have their own way of doing stuff. It's going to be different, I promise, but you have to trust. Yeah. He's been watching a week. I made 27 yesterday. I made 18 the day before. Now I made 6 today, 4 today, whatever that is. I mean, bro, I'm gonna clear 1 million this year. It's gonna be a pretty simple path to the top. Just watch. Just watch. It's not hard. This is not. There's never no control. Yeah. So the point is, how can you truly define your edge? You don't set clear rules and stop losses. Oh, bro, I set clear rules 100%. I tell you that nobody has clearer rules in trading than I do. And I think that you should probably give it a shot and check it out. Like I said, there's a reason that we went from, we have 10,000 users of our platform right now. We're going viral on YouTube right now. It's crazy the amount of publicity we're gotten. We've been on podcasts, been featured. I mean, it's crazy because of the rules. There's a whole section of rules. Let me show you what they are. Ready? These are all trading rules. This right here is all trading rules. And this is position sizing and stop rules, by the way, are all on each one of these flow paths that I do. Not only that, each particular trade setup I have has confluence indicators that go with it. I have a way to predict 3 months out into the market, right? Looking at where the options distribution is. I have strong bull setups and the confluence indicators that go with them. I have ways to find liquidity in the commitment of traders. I have position sizing guidelines around margining and futures. I have These are dynamic hedge pressures, a whole nother topic there. I have sit out rules when certain things happen and we sit out automatically. I have a clear as day position sizing guideline. Normal, small, and medium correspond to actual position sizes. And I always take a 10-point stop loss S&P, 40-point stop loss off of my strong pivot every single time, adjusted by volatility. Stop is equal to the maximum stop loss, which is one strike distance, one strike in the underlying ETF, which is 10 and 40, NASDAQ ES respective, times a volatility modifier. And the volatility modifier is actually this. You look at the 1 minute candle and you find the biggest 1 minute candle in the hour, and that is your modifier relative to your normal. If NASDAQ was 120 points 1 minute candle and my normal stop is 140, I must allow for that 40 points of chop when I'm trying to find liquidity. So 40 times 3 to match the 1 minute candle. So volatility modifier is 3 times the amount of the average volatility, which is one strike distance between ETF options. There's a whole science behind that. We actually pioneered the field so much so that there's dozens of copycats out there not trying to sell what it is we do. And they're not doing as good of a job, but the idea is that's exactly what it is. How do I have a metric if you don't follow a plan? I do follow a plan. What do you mean? That is the plan I follow. What is missing from that plan? Here, let me one more time. The plan is as follows. I find liquidity and I long it. I took a stab here and a stab here I would have taken. I just didn't decide to add to more risk. So my normal goal was to trade 10 micros total. That's a small position. Now, again, mind you, my normal position is 10 minis. That's what I normally will be doing. So I already traded a tenth of the risk because the market's irrational. When these lights are red, I trade smaller risk. Below these green bands, again, the person that can't fucking read English, Jesus Christ, kid, watch this. It's literally here on the screen. Y'all are some goofy guys. It's so consistent, I provide a flashcard. Watch this. It's so crazy how people just don't take the time to read. Where is it? Oh, here it is. Okay. Hold up. Rocket, scoot up. Brr, brr, brr. Where is it? No, not you either. Rocket, scooter. I love that song. It's such a common plan. When somebody says you don't have a clear plan, dude, it's such a common trade. Such a common trade. I hand out a flashcard with the trade literally written on it. This says red line right here. Hold on. Maybe it's because it's too small. Let me zoom it in so you can see it. This is the plan. So I'm just being like this is such a common trade to take. There's a flashcard for it. As far as plan goes, it has everything on it. Ready? No shorting below this green band. Number one. Okay. And, well, there you go. Like, the shorting is the weaker trade. It's not against the trend. The trend is actually long. You just don't see it yet. When somebody says I trade against the trend, that's what the newbie would say. The newbie is chasing the end of the trend. I can pick the trend before it happens. That's what you do as a trader. You have to get in first. So when you say you rate 3 out of 10 because I'm trading against the trend, you are a step behind, my friend. I am a step ahead. The reason that you're not seeing something is because you're following what people are doing. I'm leading. There's a difference between you and me. You're a follower. I'm a leader. Leader cashes out at the end of the day. Bye, babe. Hello, doctor. What's up?
I'll be home in like an hour. The office is 10 minutes away. It's very close.
Okay. All right. Bye. Bye. See you later. Bye. Have a good day.
He's not letting me go.
That's not true. You're not letting me go. Let go. I'm trying to work here. I'm trying to work here. What you leave me alone?
Let go.
Babe. Babe, stop. I'm trying to work. What are you doing? Stop. Goodbye. I'll see you later. Let go of my hand. Oh my God. So, number one, the trend is long. The point, what we teach you is how to be first. That's it, how to be first. That's literally the skill set that I teach, how to be first. Okay? So, the trend is correct. Not only did I show you there's more green candles than red candles at the point at which I entered, which is correct. The trend was long. I just saw it before you did. Number one. Number two is that it's such a common trade, I give a flashcard. Everyone in chat, do you see the flashcard? Especially new folks. It is such a common trade here. I trade small position, longs only. Small is this particular gauge. My normal is set at 10. There's a whole reason I set it at 10, but that's why I set it at 10. Medium that you see is going to be 1/2 of normal, which is 5. A small is 1/10 of normal, which is 1, maybe 2. And something called very small, which is 1/10 of my small. So 0.1. Sometimes they'll take a very small trade, which is a micro. So today is, everyone read really quick, right? It's a tricky stuff. Matt's the best teacher, Sigma male. Dude, I'm the best trader on YouTube, and I'm better than the next 5 traders put together, profit-wise. Real accounts, prop accounts, nothing. There's no question about it. Nobody out there in YouTube will even challenge me to one-on-one because they know, I mean, they might for fun, but like, we're all friends. So everybody out there, you just ask around. People know where the OG goat. They know that. Either who. Again, and all my friends on YouTube are great. Not knocking anybody. They're all really good. But there's always a bunch of Scottie Pippins. There's only one Jordan, and that's it. They're both great. They both make the dream team, okay? So here's what I'm telling you. It says small longs only. Longs only. Longs only. It is so common that this is a good trade that there is a flashcard that says it. When the people are like, why aren't you shorting? Why aren't you shorting? That's the trend. I'm like, just wait. I said, just wait. Small longs only. Small is 1. 1 contract with a 10-point stop. Now, let me preempt you, is that my trade has a volatility modifier times X. Okay, well, let's pick a different thing besides X, times Y. Okay, the volatility modifier comes from me looking at the 1-minute candle and finding the largest 1-minute candle I have to expect that's the average range of the current volatility. It's the easiest way to do it. If you guys want to know a trick, you do that. So at that time, NASDAQ was falling roughly 330 right down to about 230. That's about 100-ish points. So let's take account of this, and I use the worst of the two. 100 NQ on my normal 40-point stop. Again, there's a method to everything I do, 100% by the book. I never go off the cuff here. I'm literally following a freaking flashcard. It's so easy. It's there. Easy to follow. So 100 versus 40, and the S&P was roughly 15 on my 10. I look at the worst case of the two, and I say NASDAQ is the worst case of the two. So roughly, my volatility modifier needs to be about 2 or 3 times my position. This is 2.5. So what I did was, if Y was 3, that equals 30. Now I'm accounting for 30 points of drawdown. Because that's 3 times my normal stop distance, the point of winning the trade is not, you got to get the direction right, your whole 30 points of drawdown. I planned for that. I had 2 strong entries right next to each other. I confirmed that entry point with both of them, here and here. I entered at the first one, but I had the second one nearby. So when you have 2 trades in a row that are really strong pivots, you have to stab both of them. Now, because the market can move 30 points against me, I cut my position smaller. 1 mini, right? One mini text. So 1 mini takes me in the realm of micros. So because of that, I decided to enter my small position in chunks of 1/3 of my normal lot. And I rounded up and actually did like 5 and 5 micros equal to 10. And this is the 10. This is my small according to this. This is all by the rules. Okay, so far so good. I'm going to pause. I'm not losing anybody. So the person that's asking, Mars. So the metric is the plan. So far, do you see the plan? And everybody here, the 10,000 people that are on our platform can confirm that this is every single day. So far so good. Do you see the plan? I long only at red line. So far so good. I longed only at both red lines. But I didn't take this one because I didn't want to add more risk to the table because the 30 points applies from the lower pivot, as some of our people here will tell you. So in reality, my first entry could have actually taken 50 points of drawdown. Because of that, I didn't choose to add here, which I normally could have. Instead, I chose to take a position here and then hold through it. I calculated the loss I was going to have. At one contract, 40 points of drawdown is roughly $2,000 of loss. If the market were to pivot from right here where my cost basis was and make its way to the green line. Oh shit, I've been saying 4-to-1. This was a 5-to-1 trade. This could move 30 points up. Sorry, 50 points up. Times, hold on. No, I'm sorry. No, I'm right. I'm wrong. From here, 60 to 40 is 80. Yeah, so this is 80 this way. Yeah. So that's why I was saying it could be, okay, so this one is 2-to-1, not 4-to-1, sorry. So 4-to-1 would be from down here, 2-to-1 from here on this particular average. So from here, when I got my first average trade, I'm looking at this where my entry is. I'm looking from about 70 roughly to about the green line is the trade. R&R is playing off of this arrow. So far, so good. The guy that's asking about the plan, I don't think is listening anymore. But anyways, the calculation, my entry was about here. 70, I guess, to 30. So roughly 60 points up for roughly 30 points a stop off my lowest low. If we were to bounce here and go, I could try one more time down in here, which I did. In 4 other accounts with like 1 contract each. So while when I have 2 strong pivots here and here with an overshoot, and you're doing trader funding programs, the genius idea, I create so many funded freaking traders out of this. You put 1 of your accounts here, you put 2 of your accounts here, and you put the other 3 of your accounts there at the strong pivots because the volatility can overshoot all of it. You play all of it and you spread your risk out. The first entry was on the stream. The other NASDAQs were here and here. And ultimately, you win at the end of the day because that's how you have to play volatility. What is a sign that we go up from here? No sign that we go up from here. This is just a rebalancing act. There is no bullishness to today's market. But the majority of the candles as of this point in time, because we just counted them, were green. You hear the channel, what's the DD band? The DD band is based on the margin requirements of the futures contract. It's an exploit that we created that exploits the risk of the market structure breaking off of CME span, which is a program that sets margin requirements based on where liquidity is in the actual futures market. Everything that we've created, 100% is an exploit of something related to something. This green line is 100% chance of providing a high volume pivot every single time you touch it. We printed at 5 o'clock in the evening the night before. And there's your volume as you're interacting with it there. There's your volume as you're interacting with it there. And there's your pivot and your volume as you're interacting with it there. Any questions? Nobody you know on YouTube can tell you something works 100% of the time. There are people that have been watching me stream for 8 years. 100% certainty Jay, send me a message. I'll send and send me a message with email. 100% certainty. It never fails to provide a high volume pivot. Never. It's based on CME span, which sets margin requirements. If you didn't know that you can turn margin requirements into the strongest pivoting indicator that you can ever find in the market, I'm about to blow your freaking minds, guys. Right here, I shorted the other day and took that trade right off of that. There's an 88% of days will close inside of these bands. Every time you touch them, it is high volume pivot without fail. Without fail. It is never, ever, 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 never going to provide a market spike. I am reverse engineering the fucking Globex at this point. With the band that I draw 16 hours before that happens. With 100% accuracy. DD is based on the risk interval. The risk interval is algorithmically generated from a reverse engineer of CME span program. There's a video on the CME website that tells you how it works, but they don't tell you how they do it. But I figured out how they do it in 2016. And what we do is we created a number called the risk interval. The risk interval is brilliant on what it does. Can I show you guys something very cool? S&P. Every night at 5 o'clock, we calculate this number. It's based on margin requirements. 41.75. Watch this. S&P. Ready? I'm going to draw a box. I'm about to blow everybody's minds here. Okay? And most of you know what I'm about to do. But trust me when I say our $1 a day boot camp is going to absolutely blow your minds. And every class is just like this. Everyone is so different than the previous one. What did I say? 41.75, right? Okay, watch this. Watch this. There's a magic structure point to the market. We call ourselves Rocket Scooter because number one, I'm an engineering nerdy math guy. Number two is a scooter is something that you guys have been trying to pedal your way through the market with. And we're going to put a rocket on it and make it better for you. All right, 41.75, right? Okay, let's move this all the way over here. And let's do a 5-minute chart to make it easier to see more stuff. Is this the one? All right, here we go. All right, ready? Actually, that is not a 5-minute. That is a 1 hour. Let's go here. All right. Ladies and gentlemen, what you're about to see may blow your minds. What you're about to see, once you see it, you can't unsee it. Shall I proceed? Once you take a step forward, there's no going back. Shall I show you the magic of the market? The magic structure point of the market? Shall I show you how you can predict liquidity and ranges in futures based on the margin requirements? Shall I take you a step forward? I'll let the community say. Once I show you this, you're hooked. I'm literally handing you your first cigarette. Be careful what you ask for. All right. Number one, the average expected volatility of the average day. That means the market is just kind of chugging along in the average day. Will be less than that distance under normal circumstances, i.e. this in the overnight. The fluctuations of the average day will be less than this distance. Just trust me on that. The fluctuations of the average day will be less than this distance. It's nice and clean. Number two, when the market moves, let me double check the number. 41.75. Let me make sure I did it right. Once you see it, you can't unsee it. Okay. You have been warned. Okay. So this is 59.10 plus 59.51. Okay. Number two. The market likes to move in volatile ranges about that distance as it's consolidating. In the most volatile of moments. Okay. So let's find some volatile moments. Like here. When the market's chopping with a little bit of extended volatility. Again, about that range. Okay. Number three. Oops, where did my box go? Number three. When the market moves on big events, it tends to move exactly that distance when the futures market moves suddenly on the onset of an event. That's the span expected liquidity of the reported futures positions that exist. Like I said, once you see this, you're hooked. You can't unsee it. There's that dive of exactly that distance. When the market sells off in multiple waves, it moves that distance multiple times, right? And again, it's around that area. There's your first liquidity point. Number 2, as the market falls, there's your next liquidity point. As you fall that distance, you start to see volume start to pick up at exactly that distance. Here's that distance from the fall. Here's exactly that distance. And there's the volume that starts to pick up there. Here's the distance of that fall. Here's the bottom at that distance. And the volume starts to pick up there. Injected liquidity happens at that distance. Okay. So keep going. As the market moves on sudden events, it somehow loves to span that exact distance multiple times down and up. So there's one there. There's where it rallied up that distance there and that distance there. It did it twice. Again, the market moves in that discrete interval when it's trying to find liquidity. That's exactly what the margin requirement is telling you. If you never learned how margin requirements work in futures, the margin requirement is telling you where the span of liquidity is. So if a sudden onset of buyers need to find sellers, the futures market will test that exact range. The margin requirement tells you that exact range from low to freaking high. And again, there's the accumulated liquidity there, and there's the accumulated liquidity there. Like I said, I can do this 1,000 times. Here's the market selling here. There's there. From top to bottom, there's the first liquidity point. That's pretty neat. How about here? The second liquidity point. Look at the span of these candles and exactly the distance at which it ran. Shall I keep going? That is the risk interval, my friend. Shall I keep going? Would you like to see 100 more of these? Or are you convinced? By the way, here's the volume there. And here's the volume there. Would you like to see 100 more of these? This sounds like the velocity logic calc on CME. We have another thing that handles velocity logic. This isn't velocity logic. This is span. But you're close. I'm glad that you read the CME site. Keep doing a couple more. All right. Like I said, once you see it, you can't unsee it. Ready? Here's this range here. There's that span range there. You can go all day. There's that drop right there. Go all day. Ready? Let me make it bigger so you guys can see it. Okay. There's that drop there. There's that range there. There's that range there. There's that range there. Let's do the market crash day. How about here? There's the first liquidity point there. The market fell there, and there's a second liquidity point there. Market spans that distance, finds liquidity, spans that distance, finds liquidity. Would you like to see a dozen more? Are we're convinced? So by the bottom, risk of, Peter, there's a little bit more to that. Okay. Are we convinced so far that the market maintains a certain amount of structure that we've calculated? And you can see that when sudden moves happen, it moves that distance, and then you find a pause where liquidity is mobilized before it keeps going. That's what I want you guys to agree on. We agreeing so far? The market will move a certain amount and test before it moves again. Do we understand that so far? 24-hour charity stream showing nothing in the risk control. So far, it's a good, right? The stock market's unpredictable, but you can see that there's some kind of liquidity on the other end of that distance. That's all I want everybody to understand so far. Okay. So again, I reverse engineered this I reverse engineered a program called CME Span. And people don't believe me because there's a bunch of yokels on the internet. Okay. I'm a former chemical engineer. I worked at Dow Chemical. I'm kind of like, and I hate saying this because it makes me sound so fucking hokey, but I'm a math prodigy from when I was a child. Look, I did an essay question on my fluid dynamics final exam on how fast the Titanic sank, okay? But seriously, this is my engineering degree. I think it says cum laude right here. I was third in my class, chemical engineering. I used to teach at University of Houston, fluid dynamics and material science engineering, 2 different classes. As an undergrad, I was a teacher at University of Houston. So I wasn't even graduated from school. I was teaching there. So like I'm a different breed of trader. I'm a complete, slightly on the spectrum math nerd. I'm weird. And I do think I'm like, I'm not as weird as Elon, but I'm close. Okay. But there's something that happens at this distance. And again, my goal was that I found as I was trying to struggle with technical analysis, nothing was really good for trading. Everything seemed like rudimentary to me as an engineer with an appetite for like math and statistics. The things that we were taught to use just seemed very like amateur, and like they didn't seem to have any mathematical bearing on like, or the market having like bearing on this stuff. It was like the market just seemed random to me. And so, as we progressed forward, I started learning that, futures markets were trading on something called the Globex. And the Globex is a highly controlled piece of machinery that sets everything. There's rules that set margin requirements. There's rules that shut down the market. There's all kind of rules that control this video poker machine we all play on. And so I spent like a 2-year period of my life reading every single patent that the CME Group ever put out. That's correct. I got all of these ideas from reading patents. It's public information. Thank you for telling me the majority of your math. I figured out the rest of it. A patent has to reveal enough to maintain copyright protection, but a smart code breaker like myself can figure out the missing pieces. It's not hard to do when you're a math genius. So I pieced together what they were doing. They had this one protocol called SPAN, which looks at various risk scenarios that look at different reported positions in futures. If the market were to move a certain distance, there's a risk of loss in a portfolio. If the risk of loss is shown to be high in a larger spanned range, they raise the margin requirement. If the risk is shown to be low over a range, they lower the margin requirement. The margin requirement is directly proportional to the amount of risk where the liquidity is spread. So they don't tell you how they do it. They tell you the scenarios and how it works, but they don't tell you how they go from A to B and create the margin requirement, which is the minimum margin that clearing firms are supposed to have to trade on the CME Globex. Okay, so now you have to pay that much to hold a contract. The bigger the risk range, the bigger the spanned, we call it risk range, or the spanned liquidity range, the higher the margin requirement. So it only is a matter of time where I took that margin requirement and backed into the range. That's it. I just reverse engineered what the range is. I don't know everyone's reported positions because I don't work for the CME Group. But I can calculate where they're spread. And that's one of 15 things I've created. They're all along that magnitude of complexity, but it's simple for you. It's a box, it's a distance, and it shows you that there's counter liquidity that distance everywhere you go. It's a magic number that exists everywhere. Now, what is the DD band? So what happens is, what that number actually is neat about, so pretend that the market is just trucking along, right? The SPX is here. And all of a sudden, an event happens where everybody's buying. You have no idea as a market maker when that buying is going to stop. So what you do is, you do something smart thing, is you incrementally raise your prices. We all do that as a business owner, don't you? Right? Say that you own a business and demand is through the roof. You sell, I don't know, a burger for $8, okay? And there's people lining up around the block for your $8 burger. And all of a sudden, you want to expand, you want to raise your prices. Are you going to raise it just a random spot of like, $20? There's a time at which you raise prices on stuff to test the market. If you raise price too much, you create sticker shock and then you lose control of your market. You'll lose customers at this point. But if over the course of time, you raise prices from 7 to 8, or sorry, to 7 to 750, right? This is a thing of supply and demand, and then to 8. And each time you raised your prices, the line's still wrapped around the block for your burger. You have tested your market, which comfortably will accept a price range of 50 cents. So therefore, you use that as a gauge for your step change higher. Now I'm going to raise it to $8.50. Okay, there's still a line around the block. Okay, how about $9? Line around the block. How about $9.50? Yeah, the line's kind of getting a lot shorter. Okay, I found my comfort spot. So far so good. Does everybody understand this portion, right? So the idea is when you're trying to find liquidity, I'm selling a burger, you're buying a burger. Where's my liquidity in the market? Liquidity is maximization of transactions. So when you're finding liquidity, you're going to step change up until you find it, and then you stop. You can't just arbitrarily raise the price some distance, everybody randomly behaving. What the market does is it moves in intervals to test where that liquidity could be. You know why? Because the only thing that they know is where previously reported positions from the previous day are reported, which show where the liquidity is. It's the only guide a market maker has to understand how far they can raise their bid or ask to test the liquidity. So on the previous day, if everybody that's a market maker has reported their positions and CME says, okay, it's 40 points of range, then the next day a big event happens. Don't you think the machines and the algorithmic traders and the market makers would raise their bid and 40-point intervals because that's where buyers and sellers are proven to be spread out. So if a big buy order comes in and fucking rams it up the market's ass and the market goes up this way, people got to quote, a market maker has to quote both sides. Where are they going to put their ask? Well, we know from a previous day, buyers and sellers are 40 points apart. So if there's buyers right here, I'm going to quote 40 points up here to sell. So the market will move the 40 points and hit that wall of selling. And then if it's overwhelmed, it'll move that 40 points again and hit that wall of selling. It affects where market makers quote the market. Does this make sense? So you have data from the previous day, which allows people to take those step changes in the current day. When I figured out that the market works on the same mechanics of any kind of supply and demand mechanism, like the Rocket Scooter Burger Shop, you understand that markets don't just arbitrarily pick a random spot. They don't know where the sellers are going to be. So they just raise their quotes the expected distance of where the previous day told them where sellers were going to be. That 41.25 changes each day. Every single day at the end of the day, once a day, the CME Group republishes their margin requirements. We wrote a program that scrapes their website for this information. I have a bot that I wrote that reads their website. Every single day when margin requirements update, we take those margin requirements, run them through the algorithm, and then we create a table called the risk interval, which is that box. You want to see how cool that box is? Let's check it for NASDAQ. We'll do it one more time for fun. NASDAQ, 157. Okay. For funsies. You can do it for gold. You can do it for oil. You can do it for silver. You can do it for nat gas. 157. Okay, again, I'll just blow your minds a little bit more. But it tells you there's a lot more to the market that you didn't understand. And my job as an engineer was to create something that was actually repeatable. And this seemed repeatable to me on the surface, because it sounds like it's something that happens systematically, and was like, could we create trade ideas out of that, right? So this is what, 157, right? So 2,500. This is a box of 157. Okay. So repeating the rules from earlier, right? Your standard range of average trading with no volatile event is going to stay within this box. Check, 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 check. When the market is volatile and chopping around, as the market is proceeding to experience volatility, it will trade inside of that range. There's your 157 down, 157 up, 157 down, 157 up, etc. The chop of the market will be in that range. So far, so good, guys. Pretty cool. The chop of the market and the runs will be that range. There's the run on that range. I mean, God, you can see it all day long. Like, there's the run on that range. It's moving up in that interval. There's your first consolidation point. Hit the selling. Second consolidation point. Hit the selling. Right? Okay. And I can just do this all day with NASDAQ. Here's your volatile range in NASDAQ that day. Here's your volatile range in NASDAQ that day. Exactly a risk interval before it pivots lower. Market sells off and tests risk interval the whole way down. And sometimes when it gets overwhelmed, it's random as to where it will or won't find pivots. But here, as you see, we fell the risk interval. And as we plowed through it, there is a massive amount of volume after losing the first risk interval. Let me zoom in on that so you can see it. Huge volume spike. 2,000 against your average 500 contracts. And this was in lunchtime. As your break, sorry, wrong interval right here. Right here. I circled the wrong one. This one. This is the volume spike. And then the market just fell to it, found the liquidity, and then plowed through it a second time. The market is moving in step changes to find liquidity. And there's the second run. And I'm telling you, I hear the sound of people signing up for the $20 boot camp, because once you see it, you can't unsee it. There is some structure to the market that you never knew existed. And if you didn't know, the margin requirement is the most powerful piece of information to futures traders. I've created a series of exploits around it. So it changes every day in the overnight session. We do the calculation before the futures market opens, after CME publishes their updates. So what happens is it's how far the futures market can move to test liquidity. So what we did was, when the futures market is open here, when the stock market is closed, a conundrum. exists. There's a problem. There's something that happens. The futures market is free to move, but the stocks are closed. So the futures market is trying to guess where the stocks will be priced at. It's also responding to external stimuli like other markets and other markets moving around. So the futures market deviates from the thing it's tracking. Imagine that in a normal day, the futures market is moving up and the SPX is moving up. We all observe that, right? That's what we see on a daily basis. And yes, what's kind of goofy is that the hecklers and trolls come in here. But do you remember when I was in school and I was like the nerdy guy? It's always the cool kid that always makes fun of the nerdy guy. But the cool kid now works at a car wash and he washes my car when I drive up, right? At the end of the day, I get the last laugh. Don't listen to the low IQ hecklers that don't know what they're doing. You're witnessing something that no one in trading has done on the retail side. It's a cool thing we're doing. Math and magic's here. So now let me tell you something that's neat that happens. We all agree the SPX and the futures pretty much trade together. Here's ES, right? Let's just kind of show them side by side. Here's ES today. I can type in SPY. It looks exactly the same. Looks exactly the same. I can type in SPX. Looks exactly the same. Okay, so they're pricing relatively close to each other, which makes a whole lot of sense, right? But something neat happens when you think about it. So the idea is that the sum of the stocks, which is SPX, I get the last laugh and the hot Asian girl. She's going to realize one day she can do a whole lot better. But this is a sigma sum of the stocks. But until then, I'm going to have fun. And ES or SPY track the S and PX. So I'm going to put like a almost equal to. Okay. So when the stocks are closed, the futures market has no reason to go anywhere except for speculating what the stocks may be due to earnings or due to foreign stimuli like other markets and stuff. Okay. So because of this relationship, as you can tell in the daytime, they all kind of tether together, but they all independently trade too. The stocks can trade on their own. Futures can trade on their own, SPY can trade on its own, but they all move together. So it's like algorithms are watching all three of them. If there's a bunch of buyers in the ES, then the stocks are probably going to go up in value a little bit, and so will the SPY. Because they're pricing it accordingly. Aha, there's demand for the S&P derivative. Let's raise everything. If people are dumping ES futures, then the stock prices are probably going to be going down equivalently. Or they might price SPY a little lower. They go hand in hand. There's a tethering algorithm that pegs everything to the SPX. Sounds kinky. All right. So while we're pegging the SPX, oh my God, we're going to be watching the independently traded things somewhat tied to it, but somehow free to move on its own. Do we understand that part of this? Free to move on its own. So when the market is flat in the daytime and a news event comes out and the S&P drops 41 points before it starts bouncing, the market cap sum of all the stocks is equivalently adjusted that much as well. Everything prices in moves of that magnitude, right? Everything prices in some amount. And so everything moves at once. And then the stocks usually, like the futures will move first and the stocks will probably move, but then ultimately catch up. So sometimes when an event happens, futures will move really quick before the stocks move as much. The stocks catch up. Because remember, the S&P or the futures is the sum of all the stocks. So it moves down 40 points, tests, and moves down another 40 points because the stocks are just selling. And futures are trying to guess what the final value of all those stocks are going to be when they're done selling. So futures like stretches on a rubber band away from the stocks. And if the stocks catch up, then futures are there. If the stocks start moving again, the futures are going to drop another distance of that rubber band, and the rubber band's holding like this. Okay? So the idea is how far the futures are going to deviate from the things they're tracking until structure's broken. Again, why would futures be priced further than the liquidity point of where it's actually tracking the thing it should be? Futures should be equivalently priced to the stocks. So if the futures market moves slightly faster than the stocks when they're closed, or i.e. an event when the futures move first very rapidly, the futures will usually move that distance as I just showed you with those boxes. But the idea I had further with that was what happens when the stock market is closed? What happens if the futures deviate exactly a risk interval? When the stock market is closed, the thing that it's tracking isn't even trading. Can the futures market guess too high of where the liquidity can be? Absolutely. And we found out that if you take the close price of the previous day in futures and you add and subtract that exact distance, you will find predictable high volume pivots overnight in the daytime session. It is incredible how much that works. The DD band was born, and when we back tested it, 88% of days will close and pivot off of that band or close inside of it. Only 4% of days close above, and 8% of days closed below. It is incredible how accurate one risk interval off the close pivots the futures market. It's a structure point that tells you futures have moved too far against the stock market, and that rubber band has snapped and we've lost control. When you break outside of the band, a flag turns on and says irrational market. The futures have moved too far, and now we create abnormal behavior. In irrational markets, I always trade small. That is the rule. I feel like my computer is now about to crash. I hate when it does this. Let me close down some things. My mouse is starting to slow. If I go blue screen of death, I love you guys. We'll see you tomorrow. But hold on. All right. So what's neat about this is that the idea was what happens if the futures move when the stock market's closed. It is incredibly interesting how strong of a pivot is. Without fail, when you touch this band, 41 whatever points from the close, you will see pivoting action, and it's insane how strong it is. Okay. There is the first hold point, and then we pivot and bounce off of it. Then we support and bounce off of it. You see that pivot is a risk interval lower. So the idea is the market can overshoot a little bit, but tuck back in 90% of the time. People are like, why are you not shorting, bro? Why are you taking 30 points of draw? I have no fucking understanding how the market works. I've broken apart the machine and figured out what's going on under the hood. It's a whole different ball game to watch this stream. 85% win rate. I know what I'm doing. And then when you lose this pivot, the market can fall apart. And when it falls apart, part two is when you fall apart and lose that risk interval off of the close. We call it a DD band. Doomsday band is a code word. When you fall below it, the volume starts to irrationally pick up. You see how the volume magically started like randomly increasing as margin call. It's a margin call thing. When you squeeze beyond that band, you're pushing so many buyers negative that a domino effect can start. And the domino effect is really scary. That's why we trade small outside of those bands. That's why I traded small today. But when you break through the band, does everyone see here on the chart that the volume without fail also picks up irrationally? No longer does your volume have that beautiful J-shaped parabolic volume profile where your open and closes like this. Instead, you get your parabolic volume profile with increased random sporadic volume in the middle of the day. Like here, that's just as much as the open before you get your J at the end of the day. What happened here is that exactly at this moment in time, the market broke its risk interval structure. The band is, this calculation models volatility. It's a volatility. Yeah, it's based on the margin requirements. So the idea is it's the structure of the futures market. It's where liquidity is tested through any move, whether it's small move, medium-sized move, catalyst move, and then your average day is usually some time at some point, like your average volatility is definitely going to be less than this. So anytime the market has to move on a certain event, a Trump tweet or whatever, once you see it, you can't unsee it. That's the distance. 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 That is every day, all day, every day. That's one of, as much as that's crazy as that is, that's one of 15 things that we've exploited or hacked or cracked or whatever. The other 19 you can learn for $20 because we don't sell a trading class. We want to get this information out there. I'm not selling you a $500 boot camp. I'm not selling you a $1,000 thing. It's $1 to come to each class we teach. That's the risk interval. That's 1 of 20. Trust me when I say these red lines, that's another thing. These yellow lines, that's another thing. There's all kind of neat stuff that you can do with that number. The yellow lines are an exploit of something called the margin buffer limit. And again, they're predictable high volume pivots. This was calculated 3 months in the past, and that's right there. Oh, we're going to do the lotto. All right. Somebody wants to gift you guys the class. So on November, ladies and gentlemen, on November the 6th, here's another one of our exploits. We call them yellow lines. Red lines, yellow lines are the code words. These are called illiquidity pivots. This is an exploit of market maker imbalances on moves in one direction. This is an exploit of the margin buffer limit, which is another thing that exists in the whole world of futures. So what is it? November the 4th, I drew this yellow line here. On December the 17th, 6 weeks later, it was a high volume pivot, breaking highs of the market. At all-time highs, I'm pivoting the market using a similar principle. On January 27th, 3 months later, it pivots at the same spot. In February 20th, 4 months later, it pivots at the same spot. 6160 quote-unquote yellow line we've been staring at for a long time, haven't we, guys? I'm breaking down more exploits. I have 15 of them now. This green line was created this risk interval was created in 2016. We started our entire company off of that premise that we found something neat. What else can we find? And 8 years later, in 2020, we created our first app. In 2022, we created an entire trading platform. And now in 2024, we have 15 different exploits that are along the same magnitude of awesome. What you guys learned today is one thing, risk interval. That's it. There are other exploits of all kind of stuff. It's incredible what was out there. So somebody, K-Spec wanted to gift a class to somebody. All right, guys, one more roulette. Let's go. I'm out of here. All right. Somebody just got gifted 20 free days in the boot camp. Awesome. Not TPT. Free class. One word. Everybody go. Trust me when I say, guys, there's a reason you're seeing our YouTube channel all over your recommended feeds. We started getting picked up by some influencers. People are like, holy shit, we're finally noticing the stuff these guys are doing. Where are they doing? And now we're going viral. YouTube channel would have like 300 or 400 people watching, right? At any given, or sorry, like 100 people watching at any given time. Now I get 500, 600 sometimes. We're at the end of the stream, so it's kind of like dying out. But in the mornings, we got 500, 600 people here every morning, which is like 5 times bigger in the last month. It's crazy. A huge influx of people. Type in free class. We have about 10,000 users of the Rock Scooter trading platform since we launched in 2022. Massive growth spurt we're going through. But we make it inexpensive to learn everything. It's a $20 boot camp. It's $1 a day. It's designed to be expensive enough that you take it seriously. It's to pay the girl who makes these handouts for you guys. But we don't make any money off of that for the most part. It's not a cash cow to sell something for $1 a day. But it's a boot camp that is about 1 to 2 hour video every single day. At 3:30, we watch it live, and people leave comments, and I chat with them, and I watch them. We go through the video together, and then we do extended lessons to teach what's going on in the market today to go with it. It's 2 hours a day, max, every day, and we do it at 3:30 Eastern. If you can't come, it's recorded. You can watch it, and like I said, it's $1 worth of your time. Today's class, if you felt like what you learned in the last 30 minutes was worth $1, try doing it 20 more times. Come to the rest of the boot camp. And there's like a 3-day refund if you don't like it, but we teach you exploits of the market that are very, 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 very awesome. I promise. And like I said, risk interval is such a cool thing. Today's trade plan brought to you by this actual diagram that's sitting right here. Okay. When you piece a lot of it together, this red line, and we had 2 of them, which is what made today hard. One of them is expected to pivot. Well, we pivoted both of them. That's good. It finally pivoted there and finally pivoted there. And the trade goes all the way back to lower DD band. And it looks like right now it's taken off, which is crazy. So watch this move today and watch what happens when this goes exactly to 58.33. Let's see if Nasdaq's getting there faster. Might be more fun to watch Nasdaq. Oh, Nasdaq is surviving its DD band, which is cool. Nasdaq's actually back in the band. So again, this is a whole exploit of a lot of things together. It is a very neat thing. And watch, ladies and gentlemen. Watch this. There's a reason I draw it on the screen before I do it, and that's it. So the setup today, here to here, it was the actual original trade I was going to take. And while the volatility did kick us over, it was actually the correct trade to take. I took that trade multiple times in multiple accounts. One of them didn't win, but the other 4 did. That's how prop trading works. So as you see, small trade, longs only, red line, back to green. Below the green, no shorting down in here. Don't get fooled by this. Some days it'll crash, yes. Sit out and avoid the short. Other days, I always long liquidity to the test spot. This is a very key pivot today. Watch, ladies and gentlemen, what happens when we touch 58.33. Watch the market just have no hesitation to walk right to there. And then do this. And then from there, it's random what happens. I'm going to put the word random here so you guys can see that it's random. But watch. I'm going to give away 1 free class while we're waiting. Watch this. Watch this. One free boot camp. It's 20 days. Ready? Free class. Type in free class, only if you're not a member. This is going to get you free access to the boot camp. Timmy has all his questions. Matt's kind of... Dude, I only stream so I can answer people's questions. That's why I started streaming back in the day. Free class, 1 word, guys. 1 word. Victor finally going to win today. Free class, 1 word. Victor's adding to his life. Okay, so the idea is I started streaming because people had a lot of questions, and I would just like to show off what I do live. And every once in a while you get people, you know, I love to have questions. I love answering, and that's what I love to do. I'm very proud of what we've made. I'm very proud of the work that I've done. We built a massive community. Like I said, there's over 10,000 people in our community. Our Discord has like 7,000, 8,000 active people in it. So we have like 10,000 users of the platform. Big influencers starting to use the platform. I've had a couple of big influencers reach out to me to try to be affiliates for the platform. They believe in it so much. They love what we're doing and the work that we're doing, and it's so awesome to support what we're building. Our job is to create something modern using the mechanical parts of the slot machine that people don't normally look at. And then our community's gotten bigger and bigger with more engineers, more volunteers from the group that are all like data scientists, and they're all computer programmers and mathematicians, whatever, have volunteered to come through and add to the knowledge base as a community. It's like we build this as a community. We're about to do the roll, Tony. All right, ready? Set, go. Hold on, wrong song. All right, we're going to spin the wheel. No, that's the wrong song, too. We're going to pick a different song. All right. That's fun. You're a member, so you don't count. I need to be more specific. That's fun. You're a member. Only if you're not a member. You already are. If you're a member, you already got access to this. You can't win it again. S-Vaughn. Free class. All right. One more drawing. I don't think he's here. It's 20 days. It's a 20-day boot camp. Sandy. Forty seconds, Sandy. Heyo. Sandy, go to our Discord. Send me or Slacks a message. Click the top right of our Discord. Slacks, if you can. SLACKS, this guy. Go here. Congrats, Sandy. We'll get you access to it. Okay, everyone else. Everyone else. Come every day. We do giveaways almost every other day. We do ETF every Friday. On Tuesday, we're going to take profit. And when we do it. And then we're going to do probably Tradeify at some point. We'll see. I'll find out tomorrow if I can do Tradeify for you guys. So, as we're talking about the DD bands, right? Let me show you guys some interesting stuff. There's some rules here. Okay, Nasdaq opened below and now is pushing above. 88% of days will close inside of those bands. It's just statistics. There's no guarantee of the trade, but that's the actual math of the statistics. One of our members put this together, actually. He said most of our stuff is volunteer run. We're like a... While I am... Let me turn this down. Like, while I am like the leader of the community... the knowledge base is like a collective. It's like a group of people that have come together on the principles of let's reverse engineer things in the market and then share it with each other and then share it as a group. We build the platform because we all have this information to share with each other. We started off with 10 guys, roughly, or guys and girls, 10 people, you know, in the 2015 days as an old community. We met through Wall Street Bets. I used to be a moderator there, in case you guys didn't know that. I was also a moderator at our stock market and our investing. So I was co-running all three of those communities back in the mid 2010s. And we all met in the Wall Street Bets area where most of them were doing pump and dump penny stock nonsense. And we were futures traders. And so we started our own little community. And our goal was to find cool shit in the market. The original 3 guys that started the original Paradise Group was me, a chemical engineer, a mechanical engineer named Fraser, and then an audio engineer named Ben. And Ben was like the smartest one of all of us. Ben was a freaking genius. And he was like he would literally call me and say, "Hey, Matt, is your mic upside down?" I'd be like, "Oh yeah, it is." He'd be like, "Flip it around." I'd flip it around. He goes, "There we go. That sounds better." He's like, I could hear through my speakers. You sounded different today. And I was like, "Oh yeah, I put my mic on upside down. Thanks for letting me know." It was like stuff like this, right? These guys were just gifted folks. And we decided that we were going to make a community after, let's do some engineering and figure out something cool. None of us were having a good time trading with the status quo of tools, indicators, fractals, Elliott waves, harmonics, all this junky stuff, Fibonacci's, just, I don't know. To an engineer was like, we were like, "Are you sure this is what people use? This seems kind of weak." Like, well, everyone uses it, but we found out everyone kind of fails at trading. So then we were like, all right, to the drawing board we go. And basically is what happened. Timmy won as well. Let's go, baby. Ricky Vaughn, of course. So the idea was like, let's create something that was kind of like making more substantial effort at finding ways to exploit things in the market. This DD ban, it was something that we actually created a couple years back out of the risk interval that came in 2016. So the application of the risk interval against the close price was a case study that we did that had hundreds of days of data points collected. Let me even show you the degree at which people in this community participate. Let me show you, like, hold on, let me actually show it to you. Let me go here. You want me to show you behind the scenes of what, you know, dozens of member volunteers and stuff will put together. Here we go. This is when we created the DD band. We didn't even have a name for it at the time, or the DD ratio. We didn't even have a name for it at the time. But for many, many, many time periods, like I'm talking like, look, let me show you. We created information that we started recording data one day at a time, starting in, and this is when the test group got together, from May of 2022 until November of 2022. There's a 6-month window of project where we had data processing rules where all the volunteers we shared the sheet with would get together. And this is what you did for the process. There was a rule kit. We had volunteers step up and sign up for shifts to do this every day. They would run the scanner. They would get the information. They'd come load the data in here and we track it, all of it. We would track what happens at the open and all the case studies of all these different tools that got in there. We were doing the DD ratio. Okay. And then every day somebody would come in and go through the scanner meticulously and count all the data points. Then we come in here and find out that market cap weighted balance. We didn't know what we called it, mean reversion ratio. We were coming up with names for it at the time. Now it's called the DD ratio. It was a bull bear bias indicator that tried to look at the sum of the market cap of stocks being hedged on the bull side. And again, mountains of data. Every day a volunteer would come in and count every single stock and add it up and add it up and add it up. And there's raw data, and they would cut and paste it for authenticity so other people can see the data. And there's more data here. And even Amjad, our head of development, would come here and take a couple shifts when someone couldn't fill in. Okay. And on 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 and on. And it was a 6-month effort by a panel of volunteers in the Rock Studio community to come up with this number. And then we released it. It is a peer-reviewed engineering system that we've created of volunteers that build stuff as a team and crunch and analyze the data as a team. This isn't the Matt show of like, here's my cool tools, everybody, buy my shit. This is like, it was that way at first, but then we attracted other people that were much smarter than me that took the ball and ran with it. They stood on my shoulders and helped us create stuff. And we have theory crafting sessions. I get in long heated discussions with people all the time about the stuff that they find. Volunteers and members of the community who are very invested in finding something very cool all the time. And I love it. I feel like I have the coolest job in the world. We have members put together case studies. We have members put together PowerPoints, presentations. We have people that share with each other by their own research. Most of them were fueled literally by the idea that they were going to go test it themselves and call bullshit, which I love. And like one of our members, Ian, put together this probabilistic thing. I had counted the candles, and I had a thesis that 70% of the monthly candles are green because we counted them. And then he goes back and counts even further in time and makes a publication to show how it was over 30 years. I only counted 10 years, but the idea was, as our members, when we say something, they go in and test out, and these are distributions, and we give this out in our courses. Look, red months will often close well over their lows. You know, so many % of candles will recover at least a third or more of their range at the bottom. These are things we teach. It's all statistics and card counting. So members put this together to share with each other. It's not just me. Members give me all kinds of stuff. There's one person here that created an entire like note sheet for all the members. And I keep these things open all the time as people are trying to share information with each other. It's a unique community that we have. And in joining our community and using the platform is you're joining a team of people that are all working together. It's so incredible. And I guess like most people's motivation were, let me call bullshit on this guy. Let me look at the data myself. And then people look at it and they go, oh, that's good. Can I share this with the group? Well, yeah, share everything. And we've always wanted to create like a sort of dynamic, like always continuously growing community like that. So we're always a step ahead of the market, right? That's it. All right, so I finalized the stream, guys. About to get out here in a little bit and take it easy for the day. Love you guys tuning in today. This is also a profitable day for me. This is awesome. This is like a 4-day win streak. Yeah. But anywho, like I said, trust that I have a process. you know, you have people that are bringing in old habits. And, well, you know, I get it. You know, you guys are trained a certain way, but I threw out everything that people tried to train me on because the teachers of the original stuff trading were failed traders. I don't want to learn from them. I'm going to create something that works for me. Somebody said, I rate your trade 3 out of 10 because you're not following the trend. I said, no, I identified the trend. As a matter of fact, at this point, there was 50 green candles, and at this point, there was 50 red candles. I actually identified the trend an hour before it started. Where others were trying to find the trend here. Why didn't you trade into the trend? 30%, 3 out of 10. Okay, whatever. Because I see the trend before it happens. And that's what we'll train you to do, to be in first. Being in first is the difference between winning and losing. When you have multiple entries or a lot of volatility, you can spread your risk out over the range of volatility. We have to show you ways to calculate that. In the trader funding world, it's even simpler. You trade one account there, 2 more there, and the other 2 there. So one of the accounts lost money, the other 4 made money. At the end of the day, all it matters is what goes in my bank account, and it looks like I'm still green for the day. Spread out your risk when you have volatility. In bear markets like this, every other day is green. Never see a bear market and say, it's probably going to crash. If it's a bear market, you say, where can I short today? And yeah, where can we short today? MHP is a perfect short. Our liquidity maps process looks at options in the underlying to find high volume pivots off of it. As you see, this orange line has a red arrow. That was the perfect short for people trying to short this today. So, appreciate you guys. So at the end of the day, just understand that people are going to be a lot different than you. And one person said, you don't have a system because I don't see you using a stop loss. But so many times do I lose the trade because of an arbitrary stop loss. I have a stop process. I don't just place an order on the DOM. I know the control points because I taught you that the market doesn't do anything but fall 40 something points before it rests and then falls again. It's very rare that the market's going to fall 60 points without stopping. So because I know that, because 99% of the time it will stop for a moment at that 40 points, I'm never in a position where that 40 points will blow me up. Simple as that. And if the worst case scenario is it's doing this and Donald Trump speaks and I take 40 points of loss, yeah, that's a pretty big haircut. But at the same time, even if you do have a stop loss, the misconception is it doesn't stop you. Now, I'll teach you guys something about stop loss. When the market moves, especially in a velocity logic trigger on the Globex, even if you are long right there and then Trump says something and the market dumps like this and starts rallying, you might have put a stop right here, but then you got filled right there. It's how it happens. Your stop turns into a market order. By the time your market order hits the exchange, even if the exchange is a shutdown on VL, you get filled at the end of the line. A stop loss doesn't protect you like the way you think it does. It's not where you get filled. I dare you to test it. Please don't. Please don't test it, but it's not where you get filled. If the market runs on an event, if I were to short this with a stop and the market were to blast way up, I didn't stop right there. Huh. Oh, no. That's said by somebody that's not been trading a long time. You know very damn well that you get out of that trade on that stop loss at the end of that big candle. We've all been there. So you don't understand. You have a fake false sense of security with that safety net. I know where I'm going to stop and I press the button. Just because I don't put it on my screen doesn't mean I don't know where to do it. I am so meticulous at where I stop. There's a math behind why I do it and where I do it. Is ZD band a long now? No. Nope. It is not. Greater bear market. All 3 signs are bearish. We hit MHP and now we're continuing to sell. This is probably a short from here from MHP. So today is not a good dead cat bounce day because everything is very bearish. Right now, let's talk about it. You normally will take a small trade, a normal trade or medium trade off of the deal with the bands. We're now DD less than half. It's already a medium trade. We have 2 irrational signals. Therefore, even if you're taking the long, it's small, if anything at all. And so with all the signs of everything looking, it's not looking good. As a matter of fact, today I should have been paying attention. I should have shorted off of that. That's really what I was thinking about doing. But yeah, shorting off of MHP is always one of the strongest plays in a greater bear market. Yep. Different folks, different strokes, yeah. I think people are so used to seeing bad traders that they want to see somebody on the stream doing bad trader habits. People feel comfortable when you're in like the saying goes is losers like to hug losers. And I wasn't going to say that because they're not losers. But losers love to hug losers. That's really what happens. Losers try to hug winners and they go, no thanks. I don't need it. People that are losing like to band together. And it's like why GameStop and AMC had these communities. Losers love to hug losers. When you're all losing together, all you need is a hug. And another loser is ready to give it to you. And you guys fucking hug it out because you want to feel familiar with the condition or space that you're in. And losers hate people that aren't losers. If you talked any crap about GME or AMC at the time, you had a legion of hate against you. So if you're not giving a hug to the loser, they're not going to understand or understand where you're coming from. If they have a losing mentality, they're usually going to band together with others. And the winner is never paraded on their shoulders. They're never like, wow, man, you actually did win the trade. Let me learn something from you. You know what they do? They disappear when they're wrong. And that's what trading is like. I've been doing this for so many years. I know how it goes. And I'm wrong a lot. I'm not a perfect trader, but I know what I'm doing. I take it all the way to the bank, and I'm making however much this was a day. So I guess I'm just going to estimate. These two kind of neutralize each other. So let's add this up. 4,053. Is that 53? That's still a win. Still a win. I don't see the red candles jumping on the short. I look for liquidity and I long it. Thanks to Matt. You closed close to the bottom. Glad you tuned in today. Can't be stopped if not using any stops. Yeah. Stops are a fake safety net. They don't work as good as you think they do. Swing traders, yeah, use a stop. Right? If you're going to buy at 50 and you want to go to 100 and stop at 35, that's where stops are effective, where you can take 3 or 4% swing on a stop and you're kind of cool with it either way. You just want to get out of the trade. I don't want to get out of the trade. That's the thing. I don't want to get out of the trade. I know where I want to close and I will stop with a manual push of the button, but I know that I'm never going to get a sharp candle going more than 40 points on the S&P. My position is never exposed to that amount. That blows me up. And if it does randomly, and I'm in a large position and a random catalyst comes and nukes me, it is like 1 out of 100 or 1 out of 500 trades. It is very rare that I'm in a levered large position and a risk interval move comes out. Donald Trump tweets something the exact wrong timing, and then I'll take a hit. But as rare as that is, I don't walk around with with fear in my heart that the market does that every day. I've traded long enough to know that roughly 90% of days maintain structure and trade pretty commonly. 70% of months, or the last 10 years have been green. Under greater market bull conditions, 70% of days are green. I never come in and try to crash a market with a short. I come in and look for liquidity and I long it. That's the rule of the market. All short when appropriate. That's for damn sure. 14K day here on more than 10 micros across 5 accounts. Solid trade setup. Damn, Jay Mooney, my man. Did we bounce from here? No, I wouldn't bet on it. Right now, the market has found its balancing point. We've went from, let me tell you, this is why the day's kind of over from now. We went from long liquidity to the DD band. This is the trade that's on that flash card. We went from monthly hedge pressure to next resistance. This one is monthly hedge pressure to open. Monthly hedge pressure to open. This was that scalp. So the short liquidity is there. The long liquidity is there. The only thing that you can do from here that's predictable is nothing here. And if we break MHP and the market has a dead cat bounce, there's a pretty sizable run that's roughly 50 points on the S&P. So today I will pile in along at right 497.5. And let's see what NASDAQ looks like. I mean, S&P looks like, sorry. And S&P is like in the same boat, right? S&P rejecting MHP. This is just to the open, which is a really small V here. But again, if the S&P does break through here, it can continue to run. Now our resilience, which is our indicator that helps us forecast and predict if this gap is going to fill. Another thing we have is a gap fill predictor from here to there. When this white line is less than 0, I don't take that bet often. But in an irrational market, we throw resilience out. So if you guys remember from the irrational classes, we don't use it as a leading indicator in irrational. It usually is a leading indicator that predicts the gap fill on SPY, which is another one of our exploits. We use the market cap weighted aggregate of the stock's flux through redistribution zone, balancing the imbalances overnight and in the day, like MOO, MOC imbalance. And then we use that to see if the SPY is going to fill its gap. Exploit called resilience. Radiant CQG. Ryan, it's the one thing that's not automated, bro. I wish it was. It's manual, and you get them from me on the stream. I'll give them to you every morning. Can I show you how to draw a red line? Yeah. Let's do one today. Now, it's a slight subjective process, but I'll tell you what you look for. And the class will go over in detail what it is. Let's see if there's any of them apply. Hold on. All right, there's one. Here's one too. Okay, so what you do is you're looking for the following pattern. You're looking for the market to move in a direction. Let's just pick down, and all of a sudden liquidity is found. Okay, check. And then you're looking for the market to move rapidly to find counter liquidity. There's buying looking for sellers. And once the sellers have come in, they've been overwhelmed by the buyers and the market continues. What you're looking for is a first wave pivot. We go to a tick chart to find it. There we are on a tick chart, where the market spans the distance of where liquidity is. And when it tries to test the middle, remember, buyers and sellers, you meet in the middle, it's liquid. If the market is seeking liquidity and it's overwhelmed by illiquidity, you don't return to the middle, then you've created a process, what we call illiquidity pivot. Here's an example of that very thing. From here to here, clearly then run to the half. This is what's now anchoring down one of those red lines. We call this literally the anchor, okay, for here. So then what you look for is the moment of maximum illiquidity on this run, which is the maximum volatility. You look for the places where the volatility spikes the most and then dies out and then continues to run, okay? So if your anchor point is here, then the buyers are finding the maximum amount of illiquidity. Where the buyers peak out, where it's the biggest V you're looking for. These are the sizes of the Vs, and this is the biggest one. This is the top of the run. So in this particular move, if this qualifies anchor point check, then we find the biggest V that we can find. The biggest V is roughly, there's that one. There's this one. This one's relatively the same size. This one's like the same size. So we're going to use this first one because it's probably the biggest of all of them. So then what you're going to do is you're going to measure from literally here to that V. And if you retrace to the middle, then the liquidity has been found. It doesn't qualify. But you're looking for one that hasn't made its way to the middle. And that solidifies an imbalance where the liquidity test fails and then the market moves on illiquidity. So this one no longer applies. So when we did that, this anchor point no longer qualifies. But we have another one here. This one looks even better. We're going to start at the base of the move. This candle goes down, up, and then down, starts here and then moves. That's the perfect candidate from here to there. Did we touch the middle? No, we did not. We are actually one tick off. Perfect. This one qualifies. Okay, so now let's run this line to the biggest V. And the biggest V, as you see on here, is roughly this one. Again, the V is like where it V's out. Here's a triangle. Here's a triangle. Here's a triangle, right? So this is roughly the biggest one of all of them. Okay, so that's a good qualifying one. And what we're going to do is we're going to run all the way up to that biggest V and then leave the line there, okay? Just like so. And now you've created your first impact red line. We call it impact, is the impact of the first move. And as you see, for the rest of the day, this, as the rest of forever, 57.66 is a support pivot on the way down. And when you run through one of those red lines and you tap them, they're gone forever. So let's delete the ones that are gone forever. No, we don't publish them. You got to come to the stream to get them. It's part of the thing that we want you to do the process manually or just come. You can make one every single day, and it's a chore for me to update and publish them. So once you find the anchor point and find your first run length, then you start at the anchor point, and now you track until the end of the day. Now you will draw a line that follows all, and again, this is just the midpoint of the distance. Now we're going to take this and track it all the way to the end. Every impact creates what's called a run length. It's the move or imbalance for the day. It leads up in that order imbalance that closes the market out. So we're going to keep going and keep going and keep going. As long as you never retrace half that distance, then there's a run length that exists. However, as you see, at this point in time, we retraced the distance. So again, that is no longer a pivot. All we have is the one Lone Ranger down at the bottom, which is an impact line. So now going forward, every impact line is going to create what's called a yellow line, an illiquidity margin buffer pivot. So let's go here, go to the table. You're going to go to the YL category. What were we doing? Was that S&P? I forgot what I was doing. Yep, S&P. So there's another value, S&P. You're going to go here, 331.75. And so now we're going to go here and do some math. 331.75. And let's do the math. It is 57.57. I have a little calculator here. This is a cool trick. Plus 331.75. Is that what I said? Yep, 331.75. Okay. And then now you're at 60.88.75. So what I'm going to do now is I'm going to go all the way over here. I'm just going to recycle that one. 60.88.75. So right here, I'm going to draw and watch what this is going to do. What's neat about these line pivots right here is, well, these are old ones here. Did you know if the market dead cat bounce reverses from here? That's an example. And I want to kind of estimate like how far it could go. Like when I'm doing highs and lows, say that the market somehow magically reverses from here, which it probably won't, but decides to rally for like multiple days. That's what the wave looks like on that pivot low before it decides to go down. It is a fantastic trick for swing pivoting. Once the red line is hit, it disappears forever. Once the yellow line is hit, it stays there until the red line that created it is gone. So they come in pairs. So this illiquidity pivot, think about it like this. If everyone's buying and dealers are shorting, there's an extension of how long that can go till the short trade loses 99% of its value. And that creates what's called the margin buffer limit. So you're forced into liquidation on your trade. Typically, once you lose 99% or greater of your trade, your brokers close you out. So if the value of the current margin requirement were to lose 99% of its value, that is the yellow line. So that means that somebody that shorted at that anchor point is, if it's $15,000 a contract or $10,000 a contract, and you shorted one, the minute you have $100 left in your account, you lost 99%. That's the yellow line. And believe it or not, that yellow line is a fantastic high volume pivot too. They are incredible. It's a cool thing. Another thing we do here. They are fantastic pivots. I mean, they don't guarantee a reverse, but they often reverse really sharp, right on the edge. And you can draw them as far back as you want. There's tons of them. And again, as we see here, once you see it, you can't unsee it. Let me just go back and show you some extra historical examples of them. Yeah, there's an example here, pivoted off of there. There's an example here, we tapped it, pivoted off of that. The market finds resistance pressure at these yellow lines. Here's one from here, and then within a week, it was like tap, 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 reject. Here, market rejected somewhat closer to there. It's a really neat thing, and it allows you to find pivots at all-time highs. I keep history of them so we can teach you guys. From this day, I calculated one, and right here, the market didn't reject, but it pivoted off of it. And this one, it hit it and sold off that day. Literally shy of the DD band. So, and it also played what I like to call yellow line ping pong off of those. These are market makers blowing up, or possibly blowing up. It's not really happening, but that's what you can imagine happening. It's somebody short that loses almost all their liquidation value of that trade. Yeah, the green bracket is a risk interval up and down from the close price. We call it a doomsday band or DD band. It was a goofy nickname we came up with. But basically, it's a risk interval up and down from the previous day's close here. So risk interval down, risk interval up. And when you connect your CQG data, somebody asks, you go to connections, you log into your CQG account here, and your data should show up. If you log into a futures account here, the DD bands will automatically populate for you. And now, since Diddy's in the news, people call them the Diddy bands just to be funny. But we don't have a name for this. It's really, you know, a risk interval range. And we need a name for it, some kind of band. And we actually called it Doomsday because what happened was that when we did the DD ratio, we originally called it whatever that spreadsheet was I showed you was the original name. We let the team come up with the names of this stuff. And yeah, new indicator, asset manager, BLU. That's just a code word we threw in there. There wasn't really a name for it. But we were like, what do we name this thing? And we knew it was like a bull bear bias kind of indicator, but we really didn't have a name for it as we're creating it. But the cool thing about it was that because, you know, bull bear bias just sounds kind of goofy, even though that's what it technically is. The idea was whenever this ratio was less than half, the market was collapsing. So we said, aha, when the market cap is tilted to less than 50% bullish, then, and this is a ratio from 0 to 100, market cap less than 50% bullish up here, then the market's usually in free fall. And that's like, well, it's a doomsday indicator. So the market was like rallying and then it started selling. Once your ratio was less than half, we observed that the market was usually selling off pretty hard. So then it became the doomsday thing. We're all Futurama fans, so we were calling it Doomsday Clock. You guys know the Doomsday Clock joke, Professor Farnsworth. So yeah. Am I looking to long MHP on the break or short from here? Yeah, I could probably short it from there. Yes, sir. But anyways, speaking of that, it's now 1 o'clock in the afternoon. I need to go. I've been here for way too long. I do love you guys, though. I got to get out of here. Thanks for tuning in to the day. It was a great, wonderful streaming day. I made some killer trades today. I'm excited. And we will see you guys tomorrow. Oh, let me go to the songs. Don't forget to come to our classes. They're going to be at 3:30. So we start about an hour and a half. 2 hours, give or take. Like I said, it's $20 for 20 days. If you guys want to check out our classes, we'd love to have you. Community of 10,000 or so users, platform, lots of people, volunteers. We have a fun time here. It's different, a lot different than what you guys are used to out there. I love you guys. Like I said. We pull back the curtains and let you see where the institutions hide, as the song says. Congratulations, Victor, on your victory.
Resilience makes the weak one.